It does need to be more forceful. They have more room to hike interest rates. But Tom, it is interesting to start to see some of the pressure, some of the cracks. We had Target earnings yesterday, and they lowered their outlook because they are seeing their consumers pulling back. Not to mention that we're looking at mortgage rates at a 20-year high. That really eats into affordability and the ability of the consumer to spend. You also have credit tightening as rates rise. And of course, the consumer at this moment is heavily reliant on credit. Credit debt is the highest. It's all-time highs in the U.S. So should that pain continue, you could start to see it seep into data. And it just is a reminder that the Fed is data dependent, and this market can turn on a dime depending on what this data shows.
Yeah, and we heard from the Fed's wallet. Well, we don't have time for that follow-up question because we now are going to cross over to Singapore. And Bloomberg's editor-in-chief, John Micklethwaite, in conversation with the Ukrainian President Volodymyr Zelensky at the New Economy Forum in Singapore. Let's listen in.
Address this forum briefly. So we'll hand over to him. As I think most of you know, you do have headsets underneath your seats. Channel 2 is Mandarin, Channel 3 is Ukrainian, and Channel 4 is English. Thank you very much. President Zelensky, welcome to the New Economic Forum. You are here. Please take it away.
Thank you very much, John. Dear ladies and gentlemen, thank you for your attention to Ukraine. Our today's conversation finalizes practically the work of your forum, and this is very symbolic because the global situation will directly depend on when and how the Russian aggression will finish. You can see how many threats have been provoked by this aggression to the world. I'll give you just 3 examples, but there are more of them, much more than 3. Just now there was yet another terrorist attack. In the morning, dozens of missiles hitting civil targets predominantly. Russia is hitting the electricity and heat for people, hitting power stations and other energy infrastructure. This is the daily reality in Ukraine, the Russian terror. This is why we're contributing so much effort to get the modern air defense and anti-missile defense from the partners. Plus, we have more than 1,000 kilometers of front warfare. What does it mean from the global point of view? Instead of investing trillions of dollars in the development of the human capital, the world is going to spend a huge amount of money to re-equip their weaponry. Additionally, now everyone is watching very carefully how we are defending ourselves in Ukraine, looking at the performance of the weapons, which tactics would work better, which defense systems perform the best. To be honest, just several countries could have been doing the same in terms of protecting themselves from aggression with the same intensity as we are doing this. It's just they don't have so many shells and weapons to do this. But potential aggressors and potential frozen conflicts that can spark up again are more than such countries that can defend themselves. So that we have a huge deficit of security, because the more forms of terror Russia is using in this war, the more money ultimately will be used in the world for new weapons and protecting themselves, preventing these such strikes that we are going through. Another example, instead of focusing most of our attention to green transformation, different governments are looking for cheaper oil supply, gas supply, or coal supply to reduce energy prices. The price of energy and not the purity of energy becomes #1 for many countries. And this wouldn't have been the case had it not been for Russian aggression and the use of energy resources by Russia as a weapon. The third example, just in a couple of weeks, artificially, we have the threat of famine for dozens of millions of people, not because of the drought or crisis, but because of the blockade of our ports. We are the exporting country of food products. For dozens of years, the world hasn't seen anything similar. any new catastrophe because of the high prices on food or famine means subtracting more years from global development. You have been discussing many topics during your forum, but how many of them do not depend on what Russia has done or will do with its aggression? Just a few of them. So when Ukraine is proposing the peace formula, this is truly a peace formula, not just for us, but for the whole world. The comprehensive threat requires comprehensive response. Just a simple ceasefire will not do the trick. This is our formula. It has to be sustainable and long-term peace. Just by simple mitigating the crisis caused by Russia will not bring back the stability. We have to dismantle each and every threat. During the Indonesia summit, I presented our proposal of the reliable peace and dismantling of Russian threat, and I'm grateful to all the countries who are supporting the Ukrainian peace formula. And now I would like to give one more argument. What does peace mean? This is very practical. It means saving lives, stabilization, development in the first place. Joining the rebuilding of Ukraine, many companies and countries are getting additional growth incentives. When we restore our territorial integrity and will have reliable peace, Ukraine will become the reliable source of new global development. This is not just about economy. This is about modern economy. Just to give you three more examples, Ukraine is prepared to replace the dirty fossil fuels from Russia with the green energy of ours. We have huge potential in the low-carbon energy sector. Ukraine is capable of becoming a key partner to European Union for the purposes of decarbonization. We can become the suppliers of green hydrogen and green power to Ukraine. Climate conditions, green fields, energy resources of wind and solar will allow us to produce energy at a very low cost. Just 3 years before Russian aggression, we have created 7 gigs of reliable sources, and we have much more capability. Plus, we can produce dozens of million tons of cheap ammonia, plus nuclear energy and power infrastructure, which is connected to the energy grid of the European Union. Now, Russian missile terror is aiming our energy at our energy capabilities. Russia just in one day before yesterday, launched almost 100 missiles against our power infrastructure, and yet today again. So the losses are colossal, but it means that rebuilding will have to be a large-scale project, and I'm inviting your countries and your companies to start joining this rebuilding initiative. We have the decision of one of the biggest Australian investment groups who are committed first $500 million into the green growth of Ukraine under 25 billion rebuilding facility of Ukraine. And I'm grateful to Mr. Andrew Forrest for his decision to be the first, and Larry Fink from BlackRock in helping to structure this fund. Another example is resources. The modern economy needs lithium, graphite, and other rare metals. In some of these resources, we have the biggest deposits in Europe, and this is in itself is a colossal opportunity, plus transport capability, machine building capacity, our culture of labor, and access to the lead markets of the world. So this is the basis of the growth that everyone needs. The third, the agricultural sector. The world knows that without Ukrainian agricultural export, the challenge of food supplies cannot be resolved. And we've just made the decision of extending our grain supply 120 days. But we want to have unlimited duration of this initiative. Plus, we have initiated the Grain from Ukraine program so that together with partners, we could produce and give as much food support to the poorest countries as we can. But bringing back peace to Ukraine means that we will not just be able to stabilize the market in response to the crisis, but to safeguard the food stability and prevention of any further crisis. And I just given 3 examples. There are much more of them. The peace in Ukraine is a global need, not just the peace or simulacra of ceasefire which Russia would abuse to prepare for the new war, but the real peace. And I know we can achieve this, but for this we have to safeguard the global unity. We have to be protecting the global honesty, impose more pressure on Russia for the terror, and cooperate together with us for the future development. Thank you very much again for your attention. Let us reach reliable peace. Slava Ukraini.
President Zelensky, thank you very much. You have given a very eloquent defense of Ukraine's position and of your future possibilities. Can we just clear one thing up at the beginning? The rocket that landed in Poland, you know that Poland, the United States and others are saying that it appears to be one of your defensive rockets. I think it's clear no one blames you for this. You were trying to shoot down Russian missiles as they came in. But you have, as far as I can see, insisted that the rocket that hit Poland was fired by Russia. I wonder if you still stand by that.
Thank you for this question. First of all, everyone has to understand that there were about 100 missiles that were launched on that day. And I'm grateful for the world for the support of Ukraine with air defense and anti-missile defense. But nevertheless, you can see what are the consequences and aftermath of the Russian war. This is not the first time that the whole missile, a piece of missile of Russia falls down on the territory of another country. Some time ago, the same thing happened. The pieces of the Russian missiles fell on the territory of Moldova, and it was aiming at Ukrainian territory. I don't know what happened this time. We don't know 100%. I think the world also doesn't know what happened 100% in that situation. But I'm sure that this is a Russian missile, and I'm sure that we were launching the air defense missiles, but we can't say specifically that this was the air defense of Ukraine, although we are grateful for not being blamed because we are fighting against Russian missiles on our territory. But nevertheless, we have to be fair and honest. Until the investigation is over, we can't say what kind of missile or what pieces of which missile fell on the Polish territory. What we have seen, the pictures, the diameter of the hole shows that it couldn't have been just the remnants of the air defense. That's what the military told me. But again, I would like to emphasize that the most important is for the investigation to take place. Yesterday, we insisted for us to be part of joint international investigative group, and late at night we got the confirmation, and early in the morning our professionals will go to the site and will be part of this professional investigation.
Thank you for clearing that up. Since the summer, your military has made enormous progress in regaining your territory, most obviously Kherson. I suppose the question I have for you is, what about Crimea, which Vladimir Putin annexed in 2014? Is your war aim now to retake Crimea, or would merely taking back the Donbass be enough?
Thank you for this question. Our war is the war for our lives. As you do remember, the scale of occupation by Russia of our territory and what happened since the 24th of February. And our objective was to stay strong and bring back the life and peace on our land. Unless we deoccupy our whole territory, this will not bring peace to us. Unfortunately, this is the leader of Russian Federation. This is his decision. We see this. They don't want Ukraine to develop. Ukraine has chosen its way forward, and it will develop. And it is developing. In some areas, we're developing faster, even during the war, than Russia Federation, which doesn't have war on its soil. And so for the stability of the situation for our country, we have to take certain steps. And I think that restoration of territorial integrity of our country is one of those important steps to be made, and also the support of international community investments and etc.
To be absolutely clear about it, deoccupying, as you put it, includes Crimea. It is an important difference because it would be taking the border back to where it was, the effective border where it was in 2014. Is that your starting point before peace can happen?
Crimea is part of Ukraine. This is not just a state within a state. It's part of our country and part of our sovereignty. Therefore, indeed, the occupation of the Crimea and Donbass will bring the end to the war.
What is your estimate now for when the fighting might end? You just talked about a long-term peace. When might the fighting end?
As of now, we've deoccupied one big regional capital that Russia managed to occupy since the 24th of February, the only one that they occupied, and that's Kherson. It's a big territory. Kherson region, in terms of area, can fit several countries of the world, and that's a big and important territory to Ukraine. So the next steps are difficult because there's Donbass, there's Kharkiv Oblast. We almost deoccupied the whole Kharkiv Oblast. So the Donbass and the Crimea, and also the left bank of the Dnieper River, the Zaporizhzhia nuclear power plant is being occupied, Zaporizhzhia Oblast. So no one can tell that this will happen tomorrow. But I would ask the question, who does this depend on? Right now, I heard the Minister of Foreign Affairs of Egypt, and I took note. He said, the resolution of war depends on the political will of those who are involved in the conflict. He said it very carefully, as any political figure. We are not involved in the conflict, and I would like just to respond to that. We were involved by Russian Federation. They came into our territory. Our political will since the very beginning was to deal with this in a diplomatic manner. So our political will doesn't determine the end of the war. We didn't start anything to want to end it. Of course we want to end the war. We want the Russia to go away. So it depends on the political will of the Russian Federation. To be honest, not even the Russian Federation, but a group of people who manage and lead Russian Federation. So the time of putting the end to the war depend on them. On our side, If there is that political will on their side, we will. If there is no political, we will go forward and continue deoccupying our territory. That's one. Two, it also depends on what Egypt has demonstrated, that this is not just resolving an issue or a challenge. This is the war with its own crisis, a crisis that spread to the whole world. It was done not only to Ukraine, and the countries should acknowledge this, not to be afraid and not just to say conflict instead of war. And then this war, with the joint support of international community, will be resolved in a very swift manner.
You said in October that you are potentially open to talks with Russia, but not while Vladimir Putin is president. Does that really make sense? Putin is the president, short of the Russians removing him, that means there is no chance of peace talks whilst he is still president. Do you still stick by that?
As I said, if Russia does another referendum, pseudo-referendum, that is not acknowledged by anyone in the world, if they acknowledge our territories as their territories, the leader with such position will not be acknowledged by us. Me as a president cannot have any negotiations with him. That's what I said. And they conducted the referendum, and I said there's no point of talking to this person. There's no point. He will not change his policy. This is the occupying policy. He's talking about peace, just like he said, just during the G20, and on that same day, with this audacity, he launches 100 strikes against Ukraine. What can we talk about? Putin is not one person. These are several people, and there's nothing to talk about with these several people today. If tomorrow they are prepared to take the peace formula, if they are ready to withdraw from our territory, deoccupy Ukraine, and acknowledge that this is a tragedy and not just a mistake, that this is a tragedy of them being aggressors. If they are ready to compensate, as it is prescribed in the peace formula, if they're ready to accept it, only then we can start thinking about talking to this group of people. And if in Russia there will be other people who would be prepared on the diplomatic level to acknowledge the peace formula in any format, but first of all acknowledge our territorial integrity, that we are a subject, that we are the same people as they are, that they will have to acknowledge that you can't destroy Ukrainians, you can't rape people, you can't kill children. If such people will appear in Russia, we are ready to talk to them, of course.
You've described very accurately the way that the Ukrainian economy has got hit, contracted by, I think, 30% of the past year. You have inflation at 26%. You've got around 40% of your power facilities out in the attacks. The question of how you get the economy going again, what are the industries you want to focus on? And you have an audience of investors. Where is the place that you most want investment from abroad and help from abroad?
Thank you for this question. First of all, I think that we're doing all we can, and the world is helping us in protecting the sky, and 40% of our energy infrastructure was hit, so energy is very relevant. Also, gas production is another priority sector. We have not shrinked our IT sector. It's growing, to the contrary. So some of the technologies that we've developed before the full-fledged aggression, some of the technologies really triggered. We have this stability in the IT sector. We were protected from cyber attacks. There was a huge number of cyber attacks, and they continued. We still stand strong. So all services are still operating in Ukraine, the banking system, etc. So IT sector is developing very strongly. Also, because of the war, we have a very strong development of the technologies. We said that we're going to build the fleet of sea drones, and many of such things are being developed. And here we see a huge potential. And agriculture as one of the key and areas, of course. So we are very open. We invite everyone to come, all the areas starting from extraction to technologies. I think your investments will be strengthened not only by your will, but also by our protection. We have started discussion with the World Bank. Yesterday we had a meeting with the vice president of the World Bank, and we are saying that the World Bank, and we will start the pilot with them to ensure investments in Ukraine. I think that will contribute as well, and that would give assurance to the business to invest in Ukraine.
You mentioned the grain deal and the exports of grain, and that looks as if it's sort of going to roll over. The other big issue is fertilizer. You produce a lot of the world's fertilizer, and everyone is worried about the fact it's stuck, including Russian fertilizer. Do you think there is room for a deal on that as well?
Thank you for this question. Grain deal is already extended. This is not negotiated, it's already a fact. 4 months more, as I said in my statement, but one of the items of the peace formula is that it has to be unrestricted. Apart from the grain deal, you have to understand we have grown strongly in logistics. We have built different pathways during this war in the several months, and that's another area where the investments could come, and we invite them. But also the processing industry. You're talking, so I think you mentioned the ammonia transit. I said that we can agree to this only if the humanitarian aspect of exchange of all our soldiers to all their soldiers. We don't want to trade with Russia and help them, because this is our enemy, and unless they change the tactics, this is not possible. The only where we can talk about the UN, about the chemicals, about the fertilizers, I explained this to the General Secretary, and all the partners know this. Only if we will exchange all the captives, our captives for their captives.
Ukraine is dependent on foreign financial aid. The European Union has, I think it's roughly $3 billion a month, and yet some people think the European Union has been quite slow to deliver the money it's promised. Why won't Brussels move faster to help you?
First of all, we're grateful to all the partners for the financial assistance they provide. We do have a deficit in the budget, and of course, the economy during the war is not working as it used to work before, and how it will work after the war. So the 3 billion per month from European Union is what we're not getting. We would be grateful if we could have received them, but we are grateful for what we already have. We're getting from EU partners from Great Britain, from Canada, big assistance from the United States, and several other governments bilaterally from the European Union, ad hoc assistance. It goes slowly because there is this institutional aspects and bureaucracy, of course. Of course, we would want to do it faster. We're now discussing with the EU to close the deficit gap for 2023 and the support for the Ukrainian budget in the amount of 18 billion next year. Ursula von der Leyen confirmed this capability and the political will to do so, and that we'll be able to get that. But we are during the war. This is why, as the president of the country at war, I would like to say that we're all grateful, but I have to be more pragmatic. Until we get it, I can't say that we got it. So, but we believe in this.
Can I ask you to move from the pragmatism of your current situation, which everyone understands? You're at war, you are under attack. But if you look forward to Ukraine after the war, how will Ukraine be different after the war than it was before? To give you one example, many of us, when we came to Ukraine, one persistent worry was corruption. Will the new Ukraine that everyone admires so much at the moment, but the Ukraine that emerges from the war, will it be different like that? You famously ran for president not to fight a war, but to get rid of corruption. How will Ukraine be different in 4 or 5 years?
First of all, there will not be political influence of Russia on Ukraine, and secondly, there will not be influence of Russian capital. They withdrawn from our companies. We've pushed them out. The political parties that they were influencing are banned, and they will not participate in the next election. So the informational influence on our development and geopolitical direction will not be there as well. And this is very important because that shapes the independence of our country and also investments and the condition with corruption. There will be no corruption. We don't have it now, of course, because we're all united around our country. Many people, corrupt people, have left the country with their money, and we will do our best for them to stay where they now are. The most important things that we have to focus on, we are united. Only those who want to protect their country. No one will be able to forgive corruption in future after the war, because we've lived through very difficult challenges and war. Technologically, there will be no corruption because during this time we will have done everything to make sure that it works online. We already have cuts in the management of our government agencies. There should be less government in the business, so this is why we're doing all services digitally. So we've started this with COVID because of the pandemics, but during the war we have boosted this with new dynamic. So all the services are going to be electronic, so there will not be contact with the civil servants, and there will not be pressure on business. And this talks about the independence of economy and transparency of investments. And these are the most important things. I think that many people who have left Ukraine, many families with children and students who want to come back and build their country based on different values. And I think that this will be a completely different country where I would like to welcome you to come.
Well, I think if you are fighting a war, it is always good to have a dream, and I hope that you realize yours. President Zelensky, thank you very much for talking to the New Economy Forum. Thank you very much for talking to Bloomberg. and I'm sure the audience
Okay,
would like to
we have
give you
just been hearing then
a
from
round
the
of
Ukrainian
applause.
President Volodymyr Zelensky speaking to John Micklethwaite, Bloomberg's editor-in-chief at the New Economy Forum in Singapore. Joining us to recap that conversation then is Bruce Einhorn in Hong Kong. A range of topics there being addressed and put to the Ukrainian president by John Micklethwaite. Bruce, what really stood out for you?
Quite a lot of news that the president of Ukraine made in response to questions from John Micklethwaite. First about the explosion in Poland, very close to the border with Ukraine. While President Biden and Secretary General of NATO and others have said that most likely this was a Ukrainian missile that was fired in defense, President Zelensky said, well, we're waiting to see the results of the investigation. He said it couldn't have been just the remnant of our air defense. So he's still holding out the possibility that this could have been something from Russia. In response to a question about what would it take to end the war, is Ukraine looking for liberation of Crimea, something that Putin annexed in 2014, or would liberation of the Donbass, the eastern part of Ukraine that's occupied by Russia, would that be sufficient? President Zelensky said Crimea is part of Ukraine. It's part of our country and part of our sovereignty. Deoccupation of Crimea and Donbass will bring an end to the war. In response to question about earlier statement by President Zelensky that there's no point in speaking to President Putin, President Zelensky said, well, if they're ready to deoccupy, if they're ready to compensate Ukraine, if they're ready to accept the peace formula, then there's room to talk. In addition, he talked about most notably, the final question that John Micklethwaite asked him about corruption in Ukraine. Ukraine notorious for corruption. Before President Zelensky took over, President Zelensky ran on a campaign of stamping out corruption. He was quite emphatic in his answer, saying there will be no more corruption in Ukraine after the war. Ukrainians are united, having gone through this ordeal that they're going through now. There will be no tolerance for corruption going forward. Quite a lot of things that the president addressed in this interview. Very interesting.
Yeah. And Bruce, there was real outreach from the president as well when it comes to the economy, to those investors in the room in Singapore to look to Ukraine, if not now, then in the future, as a place to invest their money, whether in infrastructure, energy or agricultural, indeed technology and IT. There was also the question about the support that Brussels is sending to Ukraine, whether that is indeed sufficient. When it comes to the economy, he outlined a pretty tough picture for Ukraine, of course, within this fight. But investors may be starting to look now at what could be the opportunities in 2, 3, 4 years' time.
Yes, you're right. And he did highlight certain sectors. He mentioned the energy sector, the gas sector, IT, because he said that that's an area where Ukraine has really been developing, in large part because of the need to do this during the war. He mentioned drones as another area of potential for Ukraine. Logistics, these are all sectors that President Zelensky said would be of interest for foreign investors going forward.
Okay, Bruce Einhorn with the analysis and takeaways from that important interview, of course, with the Russian or Ukrainian president, I should say, Vladimir, Zelensky, of course, with our John Micklethwaite, our chief editor. Coming up, UK Chancellor Jeremy Hunt delivers his highly anticipated budget statement. That is later today. We're going to speak to Conservative MP Harriet Baldwin, recently elected to chair of the Parliament's Treasury Select Committee, a very important individual within the context of this autumn statement. Stay with us for that. This is Bloomberg.
CFOs are reshaping the C-suite. Bloomberg's Chief Future Officer shines a spotlight on these dynamic leaders.
Today's CFO has to be much, much more than a bookkeeper.
One of the most important things is looking around the corner.
We have to let go of the traditional legacy department store.
Their impact goes far beyond the balance sheet. And on Chief Future Officer, they focus on much more than just revenues and margins.
You also have to be credible business leaders in order to really impact the business and steer the direction.
We're like biologists. We need to deeply understand the financial DNA of a company.
People just come with a playbook and say, okay, we're going to roll that. Don't do that. Think longer term.
I think to be successful in a role like this, it is not only technical knowledge. It is about passion.
They have to love Oreos, right?
They do.
Get passion, perspective, and more from the Chief Future Officers of some of the world's most influential companies. A new episode every month, only on Bloomberg. The top names in climate change are on Bloomberg.
Building out local wind, local solar, hydrogen, these are solutions to not just climate issues, but geopolitical issues.
We are in a position by 2030 to have 80% of all electricity generated by wind.
Renewables are the safest, the cleanest, and the cheapest form of energy today, especially for countries such as Greece.
Nobody covers climate change like Bloomberg, your global business authority.
Welcome back. Now, here in the UK, Chancellor of the Exchequer Jeremy Hunt is set to deliver his highly anticipated budget statement today. Let's get to Bloomberg's UK correspondent then, Lizzie Burden, who is at Westminster with a really important guest on the context of this autumn statement. Lizzie.
Thank you, Tom. I'm joined by Conservative MP and new chairwoman of the Treasury Select Committee, Harriet Baldwin. Harriet, thanks very much for joining me on this busy morning. We now seem to have a market-friendly Chancellor. He's working with the Office for Budget Responsibility, with the Bank of England and with the Treasury machine. But the markets ended up being the real check and balance on the mini-budget, not the economic institutions. What are the guardrails for government?
I think you summed up the situation really well there, and we are in a different situation than we were back in September. I mean, as the committee, we've been calling for that Office for Budget Responsibility report, and so we very much welcome the fact that that's going to be one of the things that we see today. And we've got the Office for Budget Responsibility in front of the committee next Tuesday, and one of the things we'll want to be probing there is about their forecasts and what sort of assumptions they're making in those forecasts. I think it's really important that the UK demonstrate today that we can pay our way, and after the guardrails, as you put them, sort of slightly fell away during September and October, that we are back on track and well guarded on all sides by the institutional strength of the United Kingdom.
So do we need a rule change so that any type of fiscal statement, quote-unquote budget or not, is costed by the OBR?
Well, I can't speak for the committee, but I do think that that is an important aspect of what needs to happen. But bear in mind that we just went through a massive pandemic, that at the time the Prime Minister, Rishi Sunak, is Prime Minister now, he was Chancellor then, he announced such a sort of world-beating amount of support in record time. And we've got a police car going by. But I think in those sort of circumstances, he did have to operate in emergency circumstances. There wasn't time to have an Office for Budget Responsibility forecast, but it's absolutely clear that there needed to be one in September. We've been calling for it on the committee, and I welcome the fact that there'll be one today.
OK, thinking about today's fiscal statement then, given the Prime Minister's criticism of nurses' demands for double-digit pay rises, do bankers deserve uncapped bonuses this year?
I think that's one of the many things that were announced in September that have been rowed back on. I'm not sure whether we'll hear even that word mentioned today. I think what we'll hear today from the Chancellor is likely to, first of all, reverse most of the measures that were announced in September, but also, very importantly, from my point of view, inflation is the worst problem in the UK economy at the moment. We heard from the Bank of England governor yesterday about what they're doing to raise rates to combat inflation. But we do need a fiscal policy that's going with the grain of what the Bank of England is trying to do, that is not in and of itself inflationary. And so that's the second thing that I think I'll be looking for today.
But in principle, is removing the cap on bankers' bonuses a good idea?
Well, we've taken evidence on the committee from people like the Deputy Governor for Financial Stability, who has actually said that it's not a well-evidenced policy, that he doesn't support it because it's just led to higher fixed pay in banks. But it's not for me to come and tell you what the committee's position is today. And I would be surprised if that's something that the Chancellor dwells on in his statement.
And finally, in principle, a stealth tax is a fair way to raise revenue?
Well, look, no one likes paying more tax, do they? But I can see from the Chancellor's point of view the attraction of what you're describing as a stealth tax, which is just sort of freezing everyone's tax-free allowances for a bit longer than planned. And I can see why that's attractive on two grounds. First of all, you're less likely to notice it yourself in your paycheck. In fact, you shouldn't really see any reduction in your actual paycheck. And secondly, the fact that it's not something that needs to be voted on in the House of Commons. It's the changes that need to be voted on. So keeping things the same is something that doesn't require a vote. So it'd be less controversial to put past colleagues, I would imagine.
Less controversial, but I wonder how painful it'll be for voters. Harriet Baldwin, new chairwoman of the Treasury Select Committee, thanks so much for joining us. I hope it's the first of many times you join us. And back to Tom now.
Lizzie Burden, excellent. Thank you very much indeed. The need for that fiscal policy to align with monetary policy. Right, later this morning, we will have special coverage of the UK's autumn statement with a lineup of key guests and expert analysis. That all starts at 9:30 a.m. London time. And coming up, we're going to wrap up some of the themes driving these markets today. That is next. This is Bloomberg.
When you think space, you probably think one space agency that travels under the radar is ESA, which is surprising considering what the European Space Agency has achieved and how vital it is to the global space industry.
We've collaborated with pretty much everybody who is involved in space exploration.
ESA wants to be a leading force in furthering humanity's mission into space.
Commander Ground, do you copy? Copy.
If we want to have successful human missions to Mars, we are going to have to learn to live and work off-world in a different way. The place where we are going to learn to do that is on the moon.
Can ESA help humanity take its next giant leap?
In a multi-trillion-dollar industry, there's a lot of ground to cover.
Commodities got absolutely crushed.
We'll show you what's happening in ETFs like no one else. Bloomberg ETF IQ, Monday on Bloomberg.
This is a market that over the past few weeks has made it clear it wants to go higher. It got a little spooked by the idea that geopolitical tensions are rising.
Looking forward to the FOMC's December meeting, the data of the past few weeks have made me more comfortable considering stepping down to a 50 basis point hike.
The Fed's Christopher Waller there signalling he may be leaning towards a softer hike of 50 basis points in December, with the caveat that he needs to see the data that comes through before that decision. Besides from US data and Fed dovishness, let's broaden our focus then to the themes driving markets today. Joining us now is our equities reporter, Jan Patrick Barnett. The markets appear to be consolidating. We're looking at futures up about 0.2%, Jan. And we are still weighing up the commentary from these Fed officials. We had, of course, the San Francisco Fed president saying a pause is not in the cards, it's not on the table. There seems to be this push and pull between market exuberance and Fed officials who come and try and pour cold water because they're worried, of course, about the loosening and the easing of financial conditions.
Yeah, and that is absolutely understandable. I mean, the markets, they want to see the pause, they want to see rates coming down preferably, but the central banks, of course, they are still seeing the inflation problem and they want to keep on fighting that. And that's probably the thing that the market is battling with this direction right now. We're seeing a bit of a consolidation today and probably for the next couple of days. Indicators have run a little bit hot after that massive rally we have seen over the past month, so that's pretty normal. And let's not forget, we only got like more visibility about the inflation probably having peaked, but we have no visibility yet how low it can go and where it finally will end up.
And a bit of lack of direction, it seems, for these markets. What is the next signpost that you and the team are looking for?
Well, we are definitely looking for CPI numbers. We got the confirmation numbers today for Europe, not expecting much of a surprise there. Then we have the next reading for Europe at the end of the month, and then again at mid-December for the US. That is something we are watching. We are also watching the options market. Again, yesterday, some people said, like, it's looking pretty cheap to hedge the downside, so maybe it's not a bad idea to lock in the year end in case there's any more macro accident. We got a bad reminder the other day with the rockets into Poland, and it showed like how fragile the market still is. Again, this is a rally that is driven more by technicals rather than fundamentals. So we still want to see fundamentals going to improve to have more legs for that rally.
And tech taking a bit of a beating yesterday. Any cause for optimism within that sector?
Well, a little bit. The NVIDIA numbers today, they don't look too bad, given that what we have seen like over the last couple of weeks from tech in general. But one thing that struck out to me is like that they had a minus 50% decline in their gaming business, and that's the consumer. We're always hearing that the consumer is pretty healthy, but I wonder like if that revenue is dropping so much, if the appetite for the new gaming PC for Christmas is not too great right now.
Equities reporter Jan Patrick Barnett, always excellent, thank you. Currently, you're seeing the benchmark here in Europe, range-bound, futures US, pointing up by 0.2%. That is it for the European Market Open Surveillance Early Edition is up next. This is Bloomberg.
Everybody want to be a consultant, and what are all these consultants doing?
Well, David, I think that we actually defy the label consultant because sometimes consultant seems to imply that we only give advice. And when you look at what Accenture does, we're really different than the traditional version of a consultant. We're really about relevance and results, and that's what is driving our business.
What about a consulting project? In my example, I'm the CEO, I have a problem, I call you up, I say, solve my problem or give me a solution.
We don't operate as big companies permanently in crisis mode. And so when you think about like how long does it solve things, a lot of it starts with, you know, the company being willing to set aggressive goals. And so what we are trying to do now is work with our clients to work differently and to work faster.
Bloomberg is live at COP27 in Sharm el-Sheikh, Egypt. Bloomberg Television and Radio brings you continuing coverage as world leaders, business insiders, and decision makers gather to take action toward achieving the world's collective climate goals.
What are your top 3 priorities?
There is an ability always to find the new and innovative ways to meet the challenge and at the same time take into consideration the pressures that exist.
Special coverage continues only on Bloomberg, your global business authority. Everything you need to get set for the start of U.S. trading. Bloomberg The Open with Jonathan Farrell. Drilling down on the numbers and preparing you as only Bloomberg can. Weekdays on Bloomberg.
It's really a reminder, isn't it, just how sensitive the markets are to any commentary about trade. We did see some pressure on the yuan, we did see some pressure on the futures. That is now being reversed.
This is Bloomberg Surveillance, Early Edition, with Francine Lacqua.
Good morning and welcome to Bloomberg Surveillance Early Edition. I'm Tom McKenzie in London. Here's what's coming up on today's programme. Led down by tech, Asia stocks follow Wall Street into the red as a sell-off in Chinese technology shares intensifies. The dollar snaps a 2-day decline. Face into the storm. UK Chancellor Jeremy Hunt delivers his highly anticipated budget statement today, seeking to stabilise the public finances amid economic headwinds. And the Ukrainian President Volodymyr Zelensky speaks to Bloomberg on the final day of the New Economy Forum in Singapore. He says the war with Russia will end only when Crimea and the Donbass are returned to Ukraine. So that's the geopolitics. Let's check in on these markets then. Very modest gains across the benchmark here in Europe of 0.2%. We're looking, of course, at what's happening in the UK. The FTSE 100 currently down by 0.4% as we lead up to that important autumn statement around 11:30 a.m. UK time from the UK Chancellor and how it sets out the spending cuts and tax plans for this government to address a £55 billion fiscal hole. The futures in the US putting up by 0.2% on the Nasdaq. S&Ps on the S&P even is the Nasdaq futures pointing up by 0.3%. The Bloomberg Dollar Index, you can see there a gain of about 0.1%. And of course, we keep an eye on the pound and gilts as well. Currently, the pound is trading just a little bit higher, about 0.1% higher this morning, 119 versus the US dollar. Gilts, not a lot of action. You've got a 2 basis point move higher in yields at the front end, 3.02. At the 10-year, you're looking at 3.14 on gilts. We continue, of course, to monitor UK assets as we lead up to that autumn statement. Now, a China tech sell-off led a slump in Asia stocks earlier today. Meal delivery giant Meituan fell after Tencent pledged to distribute $20 billion of stock in the firm. With us to unpack this and more, we have Bloomberg's managing editor for Asia stocks, Lianting Tu. We're going to get to that shortly, but the context is Tencent, of course, a major investor across the tech space, not just in China, but in Asia as well, pledging then to offload a significant chunk of stocks in Meituan, another huge delivery app, really another super app in China, and concerns from investors that this could lead to further divestments for a company, Tencent, which has really acted a bit like a major venture capital firm over the last 10 years or so. So Lianting, is this the end of the rebound? We saw this aggressive rebound in Chinese tech at the early part of this week, or is it just a blip?
I think I'm leaning towards the latter. I think overall, we've seen a huge rebound in the Hang Seng Tech Index in the past 2 weeks, right? 35% gain. I think it's a reasonable time for people to sort of take stock, consolidate, take profit. And now, this week, we're seeing a huge amount of earnings coming out. And that is a good opportunity for people to actually look at the fundamentals to see if the rally is really supported by earnings and the outlook of those companies. So Tencent, as you mentioned, their earnings were actually decent, right? Revenue was a miss, but profit was a beat. And people were quite upbeat about their advertisement sales, which was very difficult in this environment. But they managed to eke out a little bit of a gain. And today we'll see Alibaba coming out. And I think the expectation is for a growth in revenue after their first dip ever in the last quarter. Things may actually look relatively good going forward if the earnings are able to sustain the rebound in tech stocks.
Okay, important context, looking ahead to Alibaba, such an important kind of weather vane and gauge of the sentiment in terms of e-commerce and sales there in China. Lianting, you're going to stick around. We're going to get a couple more questions to you, but I want to bring in JP Morgan Asset Management's Global Head of Multi-Asset Strategy, John Bilton now. Very pleased to say, joining us in the studio. Good morning, John. I want to start with China. We're going to get your views on the 60-40 portfolio. I know you've got some interesting views on that, and of course the Fed, and as we lead up to this budget or the autumn statement in the UK. But I want to start with China. Are you seeing enough now to be wanting to increase allocation to that market?
Well, look, I think we've seen that China is massively oversold. We saw that. We got a little bit of incremental good news on the property sector, a little bit in terms of zero COVID. And, you know, as your previous speaker mentioned, we've seen Chinese assets shoot upwards, but they're still deeply undervalued at the moment. And I think that's because there's still a lot of concern out there about, you know, where do we go with things like regulation? What is the fiscal stance within China? And what's the actual shape of pulling back from COVID zero going to ultimately look like? And I think as a result, there's concern generally around the globe in terms of thinking, at what point do I want to invest in China? So I think, look, if we look forward, China looks as if it could be, you know, a reasonably strong economy in the next 12 months, certainly compared with some of the concerns around recession in the parts of the world, such as Europe, such as the States. So is it something that we look forward to as being potentially an area we'd be interested in? Absolutely. But I think at the moment there's still quite a lot of cross currents that I think a lot of longer term investors are still watching.
Okay, so you're not ready, maybe in 12 months' time, but you want to see a bit more concrete evidence of some of these changes to be able to really have the confidence to dip your toes back in.
Well, I think China's been hit pretty hard by a combination of things. Obviously, the regulatory changes in the tech sector, that the property situation, and of course, COVID zero. But there are some signs, if you look at some of the export data around the North Pacific Rim, beginning to show signs of a little bit of life. And, you know, clearly, as we start to see a little bit of evidence that we're moving in a more positive trajectory, then I think investors generally will begin to re-examine China. But it's very much been a difficult market, with essentially the economy partly shut down by COVID zero, to really sort of get a trend going in.
Lianting, let's bring you back in at this point, because inflation has not been a problem for Chinese authorities for many a month, and yet the PBOC coming out today saying, warning that maybe inflation is creeping up, and concerned that that may hamstring them, at least restrict the ability for them to add additional stimulus and support for that economy. How much potentially is that a headwind for China going forward?
Yeah, it is quite interesting, and it's a bit of a surprise for investors as well, because, you know, inflation has been quite subdued. I think China's inflation is probably ranked at the lowest among major economies in the world. The signal definitely means potentially higher bond yields, right? And then we are actually seeing a little bit of a mini bond crisis going on, especially in the front end of the curve, and that has exacerbated. That was exacerbated by retail investors going to redeem their wealth management products, and if the bond yields continue to rise, that's not really good for funding environment in China, where China's trying to encourage banks to lend and companies to borrow.
Okay, Lianting Tu, thank you for the analysis and the update on what's happening in China around the inflation dynamics and, of course, the tech story as well. John, I want to get your view then, of course, and let's bring it back to what's happening with the Federal Reserve. But before I get to the 60-40 question, so Mary Daly saying, look, a pause is not in the cards, but you seem to get to the point where, for some investors at least, a slowdown. The analysis is you get a slowdown in the rate hike cycle, and that very quickly is followed by a pause. Is that a miscalculation by some of these market participants?
I think there's a little bit of overexcitement, if we're honest about it, in terms of where the Fed are going. Look, let's look at the facts. I mean, the labour market is still, you know, creating jobs at a level which is well in excess of trend growth in the US. And we need to go through a period, if we are to avoid a full-on recession, where there's a period of sub-trend growth. And that means taking some of the steam out of the labour market. Clearly, we've had some good news on inflation, which the Fed will have watched closely. But these things take time to accrue. We're not going to suddenly, you know, come collapsing down back to the Fed's target in terms of inflation. It's going to be a gradual move over the course of next year. So will the Fed slow their pace? Well, yes, of course. I mean, you're not going to carry on hiking at 75 basis points a meeting, you know, ad infinitum. But does that translate to a pause and then a reversal? That's where I think the market is perhaps getting over its skis. Does it translate to a pause somewhere in the 5.25 kind of range? That seems sensible. But I think at that particular point, just remember, As inflation comes down next year, sometime during the first half, the front end of the curve will go from negative real rates to positive real rates. And that's going to mean that some of the restrictive financial conditions which have been hamstringing markets for much of this year are likely to persist. So it does feel as if markets perhaps are a little bit over-interpreting where the Fed go from here, where a pause is sensible, a pivot probably not.
But that 5.25% call on the terminal rate from Goldman seems reasonable to you at this point?
Well, certainly where pricing's coming in. I mean, look, at the end of the day, with 4.75 through 5, 5 through 5.25, 5.25 through 5.5, it translates to a similar kind of picture, which is, but for a little bit of rounding, a positive real interest rate at the front of the US curve at the beginning, during the first half of next year.
60-40, I still have it ringing in my ears, John, from last year. The number of strategists and analysts and fund managers we had were saying, the 60 portfolio strategy, it's just dead in the water. You say it's now back. Is that a call on the end of the bond market route, or is that a call on equities?
Well, I think it's more than that, because, I mean, it's the usual Mark Twain thing, rumours of death being much exaggerated, and certainly in the case of the 60-40. It's actually more a question of actually being able to look again at the longer term. We've gone through a period...
Is that a 2-year horizon, 5-year horizon?
This is a 10-year horizon. So we think that a US dollar 60-40 base portfolio, global stocks, US aggregate bonds, should be able to deliver around 7.2% expected return on average over the next 10 years. And at the moment, we've had a year where everybody's been in the bunker, looking at short-term moves, what the Fed doing, where's inflation going. And we would simply encourage and say, look, it's been a tough year. We know that. The 60-40 suffered a 19% drawdown from top to tail. The S&P 500 lost the equivalent in market cap of Germany, Japan, and Canada put together. Okay? This has been a tough old year. But we would argue that as we look forward, as we look at longer-term projections, yields are now above their equilibrium level. Valuation excesses within the equity market have unwound. The underlying assets themselves are not fundamentally broken. This is not 2008, where the banks had gone bang, or 2012, where countries around Europe were in distress. This is a question of simply resetting some of the dislocations that had existed for a long time. So we would simply encourage folks to begin to look again at the long term. Yes, we've got a tough year ahead. Don't doubt that. A lot of volatility to come, a lot of uncertainty. But to begin to plan for the long term, we've finally got a place where the 60-40, the liquid asset markets, are beginning to allow us to achieve long-term portfolio objectives.
Okay, 7% annual returns, above 7% annual returns over a 10, 15-year period on 60-40 is the call from JP Morgan. John Bilton, thank you very much indeed for coming to the studio, head of Global Multi-Asset Strategy at, of course, JP Morgan Asset Management. Of course, we're speaking as well to Bloomberg's Lintian Tu, giving us the latest on China. Now, coming up, we're going to hear from Ukrainian President Volodymyr Zelensky, who spoke with Bloomberg's editor-in-chief John Micklethwaite from the New Economic Forum in Singapore. Do not miss that interview. This is Bloomberg.
China's military power has been growing at an incredible speed over the last 20 years.
A strong country must have a strong military, as only then can it guarantee the security of the nation.
In terms of sphere of influence, we absolutely know that China wants to be dominant in Asia. So there is a target to get to that point, to be a military that is a peer to the greatest militaries in the world by 2035.
The competition for influence is a global one. And through a multi-decade trajectory fueled by planning, money, and pragmatism, China is building a military that allows it to shape the 21st century just as the U.S. shaped the 20th.
One one covers the world like Bloomberg.
My team thinks 2023, we avoid a recession. I'm a little more skeptical about that.
China and the U.S. both do not want to see nuclear force on the European continent.
The regulators here in the Bahamas are ongoing with their investigation into FTX.
With unmatched reach and resources from more than 120 countries, the moment news breaks, 24 hours a day. Bloomberg, your global business authority. The top names at the Fed are on Bloomberg.
I think it will probably be appropriate soon to move to a slower pace of increases, but we have additional work to do.
Nobody covers the Fed like Bloomberg.
We would really want to hear that the perpetrator country is a Russian Federation. We would be happy if the speed could be named speed.
China and the United States, as two major countries, both stand to gain from cooperation and lose from confrontation.
We're at the beginning of a bridge-building effort.
As we look at supply chains around the world, they were fit for 20 to 30 years ago.
The central banks misread the signs. They misread the risk of persistent and much higher inflation.
My team, for choice, thinks 2023, we avoid a recession. I'm a little more skeptical.
We're going to have new and improved data access protocols such that only an entity of U.S. residents that in the U.S. will have access to a certain set of U.S. protected data.
Crypto industry has been cut to ribbons this year. It's just too risky to sit out with a bunch of cowboys who have managed to blow themselves up.
Okay, hearing there about the top risks that dominated talks among business and policy leaders at the New Economy Forum in Singapore. Now, the Ukrainian President Volodymyr Zelensky was also speaking there to Bloomberg on the final day of the New Economy Forum. He says the war with Russia will end only when Crimea and Donbass are returned to Ukraine.
Our war is the war for our lives. As you do remember, the scale of occupation by Russia of our territory and what happened since the 24th of February. And our objective was to stay strong and bring back the life and peace on our land. Unless we deoccupy our whole territory, this will not bring peace to us. Unfortunately, this is the leader of Russian Federation. This is his decision. We see this. They don't want Ukraine to develop. Ukraine has chosen its way forward, and it will develop. And it is developing. In some areas, we're developing faster, even during the war, than Russia Federation, which doesn't have war on its soil. And so for the stability of the situation for our country, we have to take certain steps. And I think that restoration of territorial integrity of our country is one of those important steps to be made, and also the support of international community investment, etc.
To be absolutely clear about it, deoccupying, as you put it, includes Crimea. It is an important difference because it would be taking the border back to where it was, the effective border where it was in 2014. Is that your starting point before peace can happen?
Crimea is part of Ukraine. This is not just a state within a state. It's part of our country and part of our sovereignty. Therefore, indeed, the occupation of the Crimea and Donbass will bring the end to the war.
And that, of course, was Ukrainian President Volodymyr Zelensky in conversation with Bloomberg editor-in-chief John Micklethwaite on the final day of the Bloomberg New Economy Forum in Singapore. Now, the fallout from the rapid collapse of FTX is spreading across the crypto world, ensnaring the billionaire Winklevoss twins through a liquidity squeeze at their lending partner, Genesis. Joining me now is Bloomberg's Saveshri Ghosh. Saveshri, what are the contagion risks that are unraveling now? These Winklevoss twins, they were meant to be the grown-ups in the room when it came to the world of crypto.
Indeed, they were, and many more, so seriously. So FTX filed for bankruptcy, and it has been a week since then, and we are seeing the contagion risks continue to spill over around. From crypto exchanges to crypto brokerages. It was with Genesis. Genesis is a crypto brokerage which had to halt withdrawals, and after that, that spilled over to its lender, Gemini, which is, as you said, the Winklevoss's billionaire-owned company. So there you see that, there is an earned product. Gemini has an earned product, and $700 million worth of tokens are invested through this earned product on Genesis. And that's how the spillover risk has now, moved to Gemini, which is also seeing quite a bit of withdrawals from its overall exchange platform. So it's still an evolving story. We are seeing lots of, contagion risks spreading around. We don't know when the next shoe will drop, to be honest. But yes, it doesn't look like it's going to end soon.
And how are the crypto markets kind of repricing this volatility and this uncertainty?
Now, at least today, the crypto market has been pretty much stable. We are seeing the Bitcoin price around $17,000 level, which is pretty much a steady level. It looks like for some time at least. The crypto markets have, priced in the volatility from the contagion. However, we never know because, there is the bankruptcy filing risks from several other companies that we already are hearing names like BlockFi and and Genesis. So there could be some kind of more volatility we can wait for in the crypto market as well. But for today, it was priced in.
Yeah, maybe a very brief, fleeting moment of calm across these crypto markets. Bloomberg's Saveshri Ghosh, thank you for giving us the latest on the fallout, of course, of the collapse of FTX. Now, coming up a little later, we're going to have our special coverage ahead of the UK's autumn statement. Do not miss that and the analysis and the guests that we have to preview that important event, of course, from the UK Chancellor. Stay with us. This is Bloomberg.
Of a push have you seen from the Kishida government in terms of green funding?
The Kishida administration has committed to doubling the amount of investments in so-called green technologies. I think we need more than just pronouncements. We need real money backing very innovative startups and innovative companies in this space.
What do you make of Kishida's new capitalism?
Well, I think his framework is reflective of the challenges that Japan society is facing, namely that growth has been present, but growth has not been, of course, evenly distributed. But frankly speaking, it's hard to redistribute income if you don't have much income to begin with. If the government and private sector can work together and collaborate to drive more innovative growth startups, that can really drive the income growth that the Kishida government needs to redistribute.
The difference between missed opportunity and actionable intelligence. For in-house attorneys who strive to provide superior counsel and strategic advice, Bloomberg Law offers an unmatched platform of analytics tools and business intelligence. All to help improve productivity, mitigate risk, and inform decision-making. For the comprehensive platform that helps you work smarter and faster, the difference is Bloomberg Law.
Welcome back. Let's get into the Bloomberg First Word News now with Laura Wright. Laura.
The People's Bank of China is warning inflation may accelerate as overall demand in the economy picks up. Analysts said the comments suggest the central bank could be shifting its focus away from adding more stimulus. Chinese regulators, meanwhile, are said to have asked commercial banks to report on their ability to meet short-term obligations. That's after a risk-on mood saw a rapid bond sell-off, triggering a flood of withdrawals from fixed-income products. Republicans have won control of the U.S. House of Representatives, but by a far slimmer margin than predicted. AP reports that the party now has the 218 seats for a majority after a win in a district of California. Despite concerns about Biden's handling of the economy, voters delivered a split verdict over who was to blame, with issues such as abortion rights and threats to democracy also in focus. This is Bloomberg. Tom.
All right, Laura, thank you. Coming up, we're going to have special coverage of the UK's autumn statement with a lineup of key guests and expert analysis. Stay with us. This is Bloomberg.
CFOs are reshaping the C-suite. Bloomberg's chief future officer shines a spotlight on these dynamic leaders.
Today's CFO has to be much, much more than a bookkeeper.
One of the most important things is looking around the corner.
We have to let go of the traditional legacy department store.
Their impact goes far beyond the balance sheet. And on Chief Future Officer, they focus on much more than just revenues and margins.
You also have to be credible business leaders in order to really impact the business and steer the direction.
We are like biologists. We need to deeply understand the financial DNA of a company.
People just come with a playbook and say, okay, we're going to roll that. Don't do that. Think longer term.
I think to be successful in a role like this, it is not only technical knowledge. It is about passion.
They have to love Oreos, right?
They do.
Get passion, perspective, and more from the chief future officers of some of the world's most influential companies. A new episode every month, only on Bloomberg. Today's CFOs are reshaping the C-suite, positioning companies to meet the next generation of challenges, breaking out of traditional roles to become Chief Future Officer, like Marriott's Lini Oberg.
One of the most important things is looking around the corner.
Adrian Mitchell from Macy's.
We have to let go of the traditional legacy department store.
And Luca Zaramella at Mondelez.
We tend to believe that all consumers are equal. They are not.
Look for Chief Future Officer on Bloomberg.
Good morning and welcome to Bloomberg UK, a new show with a special focus on the biggest challenges facing the British government, economy, financial services and markets. I'm Tom Mackenzie in London. Now, when Chancellor Jeremy Hunt delivers the autumn statement later today, he has one big mission: restore the UK's credibility with financial markets. That, of course, after Liz Truss and Kwasi Kwarteng's disastrous mini-budget back in September. In the offing, a big package of spending cuts and tax rises. The challenge: curbing rampant inflation without pushing the economy into an even greater downturn than it already faces. To help navigate all of these topics for us, we've got a panel of experts. First, let's head out to Westminster to get the latest then from our UK correspondent Lizzie Burden, who's on the ground for us. Lizzie, give us the big picture. What can we expect from this all-important fiscal statement today? The drumbeat has been going on in the background for a number of weeks.
Well, Tom, we can expect austerity on steroids. We've been getting lots and lots of briefings about the content of this autumn statement. That's the classic Rishi Sunak playbook from when he was Chancellor, not to shock the markets. And the new Chancellor, Jeremy Hunt, says that there are eye-wateringly difficult decisions ahead today in terms of tax rises and spending cuts, because he needs to balance the books. Now, I spoke to the new Treasury Select Committee Chairwoman, Harriet Baldwin, earlier. Here she is explaining why that's necessary.
I think it's really important that the UK demonstrate today that we can pay our way, and after the guardrails, as you put them, sort of slightly fell away during September and October, that we are back on track and well guarded on all sides by the institutional strength of the United Kingdom.
But the Chancellor really is walking a very fine line between pleasing the markets and pleasing the voters, and the economic reality is if he's going to tame inflation, he's going to have to weigh on demand.
Liz, we often get in these autumn statements the Chancellor pulling a proverbial rabbit out of the hat. Are we expecting any surprises this time around?
Well, Jeremy Hunt has said there won't be a rabbit coming out of the hat today, but there are a number of questions that we want answers to. What will be the balance between tax rises and spending cuts? Is he going to backload some of this austerity until after the 2024 general election, and how will that go down with markets? Is he going to overcompensate in plugging the fiscal gap? Who's going to be hit by these tax rises? Who's going to benefit from support? But it's classic Rishi Sunak to under-promise, over-deliver. You can perhaps expend some extra billions of pounds on, as I think it was Alex Wickham who reported, making homes more energy efficient to reduce energy demand. And also, Rishi Sunak has said that his top priority is inflation. He seems to be a bit confused whether it's inflation or controlling illegal immigration, but close behind those is education. So you can perhaps expect some more spending there.
OK, and we're going to be bringing in Alex Wickham very shortly for his analysis as well, Lizzie. Before we do that, one last question on the backloading of some of these measures then, and the thinking behind that. What is the rationale for pushing back some of these spending cuts, some of these tax rises?
Well, it's a naked attempt to win over the public because no one wants to return to austerity. Labour's already calling it austerity 2.0. But by saying that it is going to happen at some point, the Chancellor will be hoping that the markets will be convinced that this fiscal largesse isn't just going to be inflated away, as perhaps was the thinking with the mini-budget in September, hence the market turmoil then.
OK, Lizzie Burden on the ground for us, of course, outside the Houses of Parliament, leading up to that important statement, of course, the autumn statement. Let's bring in now Alex Wickham, our BN reporter, who, of course, is incredibly well-sourced and has been following all of these things for us for a very long time and is kind of very well briefed on what we can expect. Alex, we were talking in the break about the fact that there's been leak after leak in the build-up to this statement. How much of that is about putting some kind of boundaries around the expectations? There's going to be a lot of pain. This is about softening that public reaction for what is going to be a brutal autumn statement.
Absolutely. We've heard a lot in the papers over the last couple of weeks about things that Jeremy Hunt is considering and, things that Treasury officials are supposedly looking at. Things like putting the top rate of income tax up to 50p, which would be, for a Tory government, a pretty extraordinary thing to do. And certainly speaking to Conservative MPs, they simply don't believe that that's a genuine thing that's under consideration. What they think that is a bit of a kite flown by the Treasury through the media to sort of say, well, look, it could be even worse. Look at what we could be doing. I know you're not going to like what's in the autumn statement, but at least we didn't do X, Y, Z. However, the reality is that whatever comes out today, rises in council tax, things like that, those are very tough politically for Conservatives to be putting on the public and their own voters.
OK, Alex is staying with us for more on the political angle for this as well. But let's bring in now Gemma Tetlow, who's Chief Economist at the Institute for Government. And, of course, we'll continue to get back to Alex for the political lines on this story. Gemma, thank you for joining us this morning. What is your analysis of the impact on the economy and growth as we look into 2023? We don't have the autumn statement yet, but a lot has been flagged. What is your forecast at this point?
I mean, as you've already been discussing, the government faces a very tricky balancing act here to show credibility on the public finances, get borrowing and debt under control, whilst not unnecessarily aggravating the recession that's coming. But we are in a situation where the Bank of England thinks that we need an economic slowdown to get inflation under control. So actually, it's quite likely that a lot of any fiscal action would be offset by monetary policy. So if the government goes for a looser stance on fiscal policy, then that could result in somewhat higher interest rates than otherwise would be the case, and vice versa. If the government goes tight on fiscal policy, there is some scope for the Bank of England to offset that. So there are lots of dynamics going on here. And obviously one important factor for households is energy prices over the next year or so. And so I think probably the focus of government support in the near term will be what do they do for energy bills beyond April. We know the energy price guarantee is currently set out, ends at the end of March. So what does Hunt do to support households with those short-term costs of living, whilst at the same time getting public finances back on a sort of sustainable path?
So, and that ties in, of course, we saw the CPI print yesterday, 11.1% coming well above the forecasts, Gemma. On the question of energy, how much scope does the government have to expand that cap beyond April? If it becomes more targeted, do we have a sense of what the drag will be then on inflation in the quarters beyond April?
Obviously, the energy price guarantee, by sort of bringing down near-term energy costs, in a sense, slightly extends the period over which we see higher inflation, because it takes longer for that to drop out, rather than having a big short-term spike and then dropping back. We see a bit more of a prolonged period of somewhat higher inflation. The possible danger of that is that people start to build it into their expectations more, that the longer a high inflation goes on, the more they expect that to continue. However, from sort of what could they do fiscally, I think it would be interesting to see.
Sounds like we may have a technical problem with Gemma. Gemma, we'll just try and check your line, because you just dropped out there for a second, so our technical team will check in on that. I want to bring back in Alex Wickham then for the politics of this. And Alex, you've been, there is a sense, and Lizzie was saying, that describing it as kind of naked politicking around the backloading of some of these measures post, of course, the election. It has to be held by January 2025 at the latest. How confident is the Conservative Party that they can close this polling gap with Labour, given that they seem to be looking at some of the policy measures that the Labour government, opposition Labour Party, I should say, have touted themselves, whether it's a windfall tax on energy or more support for lower income households?
I think the answer is not very confident. The dual challenge of this autumn statement is that, yes, they've got to calm the markets, but they've also got to give something to voters to make them think that there's a point in voting Conservative at the next election. If all they're getting is sort of managed decline, after 12 years of Tory government, this is the best we can do, this is where we're leaving the country heading into the next election, that is a very tough sell to the public. And these are tax rises across the board with spending cuts, and whether they're felt in time for the election or not, that is the mood music that we'll have going into it. And certainly speaking to Tory MPs and advisors over the last couple of weeks, they are very glum about the prospects of any sort of positive message or strategy for the public. How do you sell this to the public in any other way other than we messed up and it's going to be painful?
And no doubt they'll be watching the polls very quickly or very closely after this autumn statement. They currently have a deficit, what, about 20 points in the polls versus the opposition Labour Party. Very pleased to say we're now joined by Andrew Senton, Senior Advisor to Cambridge Econometrics and, of course, importantly, former member of the Bank of England's Monetary Policy Committee. Good morning, Andrew. Thanks for coming into the studio.
Yep.
What is your level of confidence that the UK Chancellor can both reassure the markets and avoid a complete collapse of UK public services?
Well, as you're indicating, he's got quite a difficult balancing act to do. He obviously has to show that the government has a grip on public finances, that they have an idea of where the economy is going, which is realistic, which will probably need to factor in some form of recession over the next 12 to 18 months. But at the same time, they've got to also make sure that the public spending and tax numbers add up. I think all the rhetoric from the Liz Truss camp about tax cuts is really off the agenda. The question is how much tax raising do we need to balance the books? And as your question suggests, that you can't just continually squeeze public spending. That was not very successful after the global financial crisis. So there needs to be some restraint of public spending, which will need to be quite targeted so that it doesn't fall on areas that are very sensitive, like health and education, which are also important for the running of the economy. But going too far in terms of squeezing public spending and cutting back on public investment would not be good for the economy.
And we saw that print, the inflation print yesterday, 11.1%. The Prime Minister says it's his #1 target to tackle inflation. And we know that BOE and Andrew Bailey, of course, very closely focused on this as well. Is it your assessment that inflation, though eye-wateringly high yesterday, is now peaking in the UK?
Well, it's close to the peak that the Bank of England indicated. They suggested an average of 10.9% over the 3 months, October to December. And perhaps a little bit higher. But I think the main thing about inflation is it's going to not be until the middle of next year when it really starts to come down significantly. So it's going to be over 10% until the middle of next year, according to the bank's forecast. You say that the bank is focused on controlling inflation, but they haven't done a very good job so far. And they were very slow at raising interest rates last year. I think they've been overcautious in terms of getting a grip on inflation. It's not primarily Jeremy Hunt's job to get on top of inflation. That's the job of the Bank of England. What he needs to do is provide a stable backdrop so the bank can do its job. So we don't want big lurches in public spending or taxation in one direction or the other in the short term.
Okay, and I want to get back to your views on the need for additional rate hikes and how the BOE is behind the curve on this, but I want to bring back in Gemma at this point, Gemma Tetlow from the Institute for Government. Gemma, you touched on this when we spoke a couple of minutes ago. Are you starting on the labour market and the strength of the labour market here in the UK and what that challenge that poses to the inflation dynamics? Are you starting to see evidence, is that coming through in the data, of a wage price spiral?
One of the problems that's definitely facing the UK is tightness in the labour market, and that's largely because we've seen a lot of people dropping out of the labour market after the pandemic, and some of that seems to be poor health related. So a lot of these challenges are interrelated, and for example, backlogs in the health service are probably not helping people to get healthy again and get back to work, and that is causing more pressure on inflation because of the tight labour market. It's difficult to say there's really any evidence of wage price spirals. I think we are in a very different world from sort of 1970s when we last had an oil price shock, because there's very low rates of unionisation and much less widespread collective bargaining on wages, which makes it less likely we're going to see a wage price spiral emerging.
Andrew, let's bring it back to rate hikes then, with that backdrop around the tightness of the labour market. 4.5% seems to be what the markets, certainly Bloomberg Economics, are looking at 4.5% as the terminal rate for the BOE. Is that enough to get inflation back down to target?
Well, I'm not sure it will be enough. You're quite right to say that many people are looking at somewhere between 4 and 5%, where interest rates will go in the short term. But the question is then, if they get there, say, within the next 3 to 6 months, is that going to be sufficient to bring down inflation? And with the latest numbers showing inflation over 11%, and RPI inflation is 14.2%. These are eye-watering figures, and it does suggest to me that interest rates will need to go possibly above 5%, perhaps into the 6 to 7% range, by the middle of next year, in order to get a grip on inflation.
6 to 7%.
That's quite possible. Yes, I'm not saying that's nailed on.
No.
But that's the sort of range that people need to think is quite possible.
What kind of depth of recession does 6 to 7% translate to then?
Well, I think that depends a lot on what's going on other fronts, like the state of the world economy, what's happening with energy prices, etc. But it's certainly not going to be helpful to the real economy, and it's going to be a big shock for many households and firms. Now, I'm not saying that's my central forecast, but that's the risk forecast, that if we can't get on top of inflation, that's where the Bank of England may need to go.
Okay, Andrew Sentence, thank you very much for your time, for joining us in the studio ahead of this autumn statement. Of course, former member of the MPC, now senior advisor to Cambridge Econometrics. And of course, we thank Gemma Tetlow, chief economist at the Institute for Government, and Bloomberg's very own Alex Wickham as well, with a string of scoops leading up to this autumn statement. Now, coming up, more on UK personal finance ahead of the Chancellor's autumn budget statement. Stay with us for that. This is Bloomberg.
Everybody want to be a consultant, and what are all these consultants doing?
Well, David, I think that we actually defy the label consultant, because sometimes consultant seems to imply that we only give advice. And when you look at what Accenture does, we're really different than the traditional version of a consultant. We're really about relevance and results, and that's what is driving our business.
What about a consulting project? In my example, I'm the CEO, I have a problem, I call you up, I say, solve my problem or give me a solution.
We don't operate as big companies permanently in crisis mode. And so when you think about, like, how long does it solve things, a lot of it starts with, the company being willing to set aggressive goals. And so what we are trying to do now is work with our clients to work differently and to work faster.
Bloomberg has enhanced search on the terminal to deliver what you need when you need it. Now, you can simply type phrases in everyday English in the command line. Compare financials. Find people. Analyze markets. You can enter phrases or ask questions. What do you want to know today? Ask a question or visit SearchGo to find answers now.
It sounds like we are having a big tax rise, but it's going to come from perhaps lots and lots and lots of smaller measures. So freezing many tax allowances, so the point at which people start to pay income tax, the point at which people start to pay higher rate tax, freezing, for example, limits on pension contributions, freezing the point at which people start to pay inheritance tax, some explicit tax rises too, possibly cutting the annual allowance for capital gains tax.
That was IFS Deputy Director Carl Emerson on his expectations for today's autumn statement. And if audio is your cup of tea, don't forget our UK and London-focused podcast, In the City. Episodes are out every Thursday. on your favourite podcasting service. Now, coming up, John Stepek, author of Bloomberg's new Money Distilled newsletter, joins us for more on the autumn statements, what it means for your UK personal finances. Stay with us for that. This is Bloomberg.
China's military power has been growing at an incredible speed over the last 20 years.
A strong country must have a strong military, as only then can it guarantee the security of the nation.
In terms of sphere of influence, we absolutely know that China wants to be dominant in Asia. So there is a target to get to that point, to be a military that is a peer to the greatest militaries in the world by 2035.
The competition for influence is a global one. And through a multi-decade trajectory fueled by planning, money, and pragmatism, China is building a military that allows it to shape the 21st century just as the U.S. shaped the 20th.
The top names in climate change are on Bloomberg.
Building out local wind, local solar, hydrogen, these are solutions to not just climate issues, but geopolitical issues. We are in a position by 2030 to have 80% of all electricity generated by wind.
Renewables are the safest, the cleanest, and the cheapest form of energy today, especially for countries such as Greece.
Nobody covers climate change like Bloomberg, your global business authority.
This is Bloomberg Daybreak with Lee.
On Bloomberg Radio.
Welcome to Daybreak Australia.
This is Count Under the Close.
Welcome to Bloomberg Crypto.
Welcome back to Bloomberg UK. I'm Tom McKenzie here in London. Now, UK Chancellor Jeremy Hunt delivers, of course, his autumn budget statement today as he wrestles with inflation at 11.1% in the year to October. That is the highest in more than 4 decades, 41 years. Joining us now, I am pleased to welcome Bloomberg's John Stepek, who looks at all things personal finance and the implications of the macroeconomics and monetary policy on personal finance. John, what can we expect then? What are you looking at from the autumn statement, from your perspective?
I mean, the main thing from our perspective is fiscal drag. There's a great quote from the chap who was Louis XIV's finance minister.
Wow, we're going all the way back to Louis XIV.
All the way back, Jean-Baptiste Colbert.
Yeah.
And he basically said the art of taxation consists in so plucking the goose as to obtain the largest possible amount of feathers with the smallest possible amount of hissing. And basically, we're the goose and Hunt is the feather plucker, and there's an awful lot of plucking to be done, unfortunately. I mean, fiscal drag is what happens when you freeze tax thresholds. And all that happens then is that more and more people end up paying the tax as a result of inflation rather than because their real wealth is going up.
This is the stealth tax.
Yeah, it's the stealth tax. And I mean, it's sneaky, but it does work because it doesn't tend to hit people immediately. Its effects only become apparent over time, but at the same time, it raises a lot of money. I mean, there's one good example. So the 45% tax rate, additional tax rate, top rate income tax in the UK over the past 10 years, the threshold for that hasn't changed. So you pay it once you earn above £150,000 a year. Now, in 2013-2014 tax year, 311,000 people paid that. That is projected for the 2022-23 tax year to be 629,000 people. So it's doubled over the course of a decade, and that's purely because the threshold hasn't changed. You know, if the threshold had gone up with inflation, then the number of taxpayers paying it would also not have risen as rapidly as that. And there's similar impacts further down the scale from things like child benefit. So once someone in your household earns above £50,000, if you get kids, you know, you get child benefit. It used to be a universal benefit. Now it's gradually withdrawn as soon as someone in the household earns above 50,000. Now again, that threshold hasn't changed since it was introduced. And the number of taxpayers that it captures has gone up from about 750,000 to nearly 1 million households now. So basically it makes us poorer over time, but we don't notice it as much because...
It's good news for the Treasury.
It's great, and it's great news for the Treasury.
John, give us the strategies, give us the tips for avoiding this upcoming storm that's about to be unleashed, or is already being unleashed on households around the UK. What can we do?
Well, no, this is the tricky thing. I hate to say it, but you really, what you really need to do is be on top of your personal finances in a way that I think that we've perhaps got out of the habit of over the last 10 years or so. So in the last 10 years, for example, you know, we haven't had to worry about inflation. We haven't had to worry particularly about savings rates because there haven't been any. You know, so for example, if you've had cash in your savings account, you've got used to it paying 0% and not really thinking about it. Now you can probably get about 4.5% if you shop around. So even though you're still getting hammered in real terms after inflation, at least it's not as bad as it could be.
John, we have to leave it there, but another tip would be to read your newsletter, which is, of course, on the terminal and on Bloomberg.com. Thank you, John Stepek, there for joining us. Now, check out Bloomberg's, I've done it already, UK New Vertical. That is on Bloomberg UK Wealth. It focuses on personal finance, aiming to help people make smarter decisions about their money. Never more important. Head to Bloomberg.com/UK Wealth, where you can discover new features, including John Stepek's free daily newsletter, Money Distilled. Bloomberg Surveillance Early Edition is in the next hour. Stay with us. This is Bloomberg.
The 700th anniversary of Dante Alighieri's death has triggered the work of many institutions and offered a very rich schedule of events. Today in Santa Croce, we present one of these projects that suffered a difficult start because COVID-19 has stopped the project that was shared by the Opera di Santi Croce by the Franciscan community from Florence Municipality and the Fund for Religious Building of the Internal Minister. Today, Felice Limosani's project is finally enjoyable. In the Pazzi Chapel, the marvelous architecture by Filippo Brunelleschi, the most important images from the Divine Comedy created by the French illustrator Gustave Doré. Through these images, we can live the violent emotions of hell, the weight of purgatory, and the sublime joy of paradise.
The digital humanities are a cultural occasion to exploit. Summing up, it's about merging humanistic disciplines with new technologies. I find this to be an innovating and modern tool to update culture. Cultural heritage becomes something to hand over to the new generations and not to be put aside, so it's about using technology, pixels, and binary code with a human and humanizing content.
Bloomberg is live at COP27 in Sharm el-Sheikh, Egypt. Bloomberg Television and Radio brings you continuing coverage as world leaders, business insiders, and decision makers gather to take action toward achieving the world's collective climate goals.
What are your top 3 priorities?
There is an ability always to find the new and innovative ways to meet the challenge and at the same time take into consideration the pressures that exist.
Special coverage continues only on Bloomberg, your global business authority. In a multi-trillion-dollar industry, there's a lot of ground to cover.
Commodities got absolutely crushed.
We'll show you what's happening in ETFs like no one else. Bloomberg ETF IQ, Monday on Bloomberg.
What central banks around the world have clearly recognized is that they need to move in a determined fashion to durably bring inflation down.
I think that the main risk now for financial stability is that we are going to see lower growth.
And the price of energy and not the purity of energy becomes number one for many countries. And this wouldn't have been the case had it not been for Russian aggression.
This is Bloomberg Surveillance, Early Edition, with Anna Edwards, Matt Miller, and Kaylee Lines.
It's 10 a.m. in London, 5 a.m. in New York, and 6 p.m. in Hong Kong. Our top stories today. Budget day in the UK. Jeremy Hunt will try to reassure markets he can stabilise public finances without devastating cuts in government services. The crypto crisis spreads. The fallout from the collapse of FTX has now ensnared the billionaire Winklevoss twins. And a power shift on Capitol Hill. Republicans narrowly regain control of the House, giving them the ability to block President Biden's agenda. Welcome to Bloomberg Surveillance Early Edition. I'm Anna Edwards in London with Matt Miller and Kaylee Lines in New York. We reflect on the market moves of yesterday, Kaylee, and concerns once again about the Fed and the extent of tightening we're going to see. And markets pretty muted this morning with that in mind. Of course, the focus here on the autumn statement.
Yeah, we're waiting for that to come up in just about an hour and a half's time, Anna. So definitely markets in the UK and really around the world will be paying attention to that. But as you say, muted sentiment overall, and it was definitely in the more downward direction in the Asian session overnight. Stocks there broadly lower. The MSCI Asia Pacific Index down by about 0.8%. One of the biggest drags within Asian equities was Chinese technology stocks. The Hang Seng Tech Index down about 2.2%. Now, part of that had to do with Meituan shares dropping after Tencent's announcement yesterday that it's going to offload about $20 billion of those shares. So that dragged overall. But Chinese equities more broadly were hurt by a PBOC statement about inflation, saying it could pick back up as demand in the economy revives itself. So that indicates that the scope for monetary policy easing may be limited. And of course, you also have seen a lot of movement in the short end of the government bond curve in China. The 2-year yield now at 2.16, which is the highest since August. And you actually had Chinese regulators asking banks about their ability to meet obligations given the bond sell-off we have seen. So that is a story to watch. Finally, in foreign exchange, I would note that the offshore yuan is one of the big underperformers against the US dollar, though basically all currencies in Asia and G10 are weaker against the dollar today, but the yuan being one of them, weakening by about 0.6%. We're at the 715 level at the moment, Matt.
All right, take a look at what's going on in S&P futures. We are down after the finish down yesterday in the cash trade. I think we were around 3,952 on the S&P, and it looks like we could come further away from that 4,000 level as markets are dissuaded by Fed speakers about counting on a pause, if not a pivot. The Bloomberg Dollar Index also a headwind, rising up again today to 1278. The U.S. 10-year yield also a headwind, rising up today to 372. Although it should be said that we've been seeing 380s over the last few sessions, and it's much better than the 4 and change that we had seen before last week. So even though yields are rising on the 10-year, they're still really low compared to what we've seen over the past weeks and months. Bitcoin right now is down about 0.1%, still hovering around the same level that it was yesterday. And the day before, what's today, Wednesday? No, today's Thursday. And the day before, Bitcoin has just been hanging around 16,000 and change ever since the dramatic collapse of FTX. And it doesn't seem to be any more or less volatile than the S&P, which has also been hovering around the same levels all week. Anna, what do you see in Europe?
Yeah, well, it's definitely Thursday here in Europe, Matt, I can confirm. Don't do that to us. Don't make us do it all again. We've got the London market underperforming, basic resources under pressure today, in keeping with a slight slip in that global risk appetite, and that's weighing on those global resource stocks. So we're down by 0.5% in London, down by 0.5% on the CAC 40, also in Paris. The German market really stands out, though, up by 0.25%, and it is one of the heavyweight German names that is taking us there. We'll come to that. In fact, let's go to that now then. Siemens is up by 6.6% today, and this is having a big upward impact on that German market. The engineering giant reporting numbers, and it seems that it's the factory automation side of things that's really delighted the investor community, and certainly I've seen some very positive broker comment, analyst comment as a result of that. Burberry, I also put this one in here, not for the share price move, as you can see it's not moving very much, but an interesting story. They reported numbers earlier on. There's been a changing of the guard at Burberry recently, and they talked about bringing back the Britishness. Now, I don't know what that means, but I'm sure they do, so that'll be interesting to watch. The euro is down by 0.3%, 103.65, so just backing away from that 104 handle. Interesting reporting by our Bloomberg colleagues tracking the ECB story, saying that perhaps we'll see a downshift from the ECB from 75 to 50. I spoke to Plurimi Wealth Management earlier on, and they were saying that would be their view because they don't think that the ECB or the Bank of England will want to do more than the Fed. And so if the Fed downshifts, we can expect the same elsewhere, is what they were saying. Talking of the Bank of England, they'll be closely watching the pound, they'll be watching gilt markets, and they'll be closely keeping their eye on what's going on in Westminster with the UK Chancellor Jeremy Hunt set to deliver his autumn statement. So with all of that in mind, I put a focus on UK assets. We will focus later today on the House of Commons. Jeremy Hunt will be attempting to reassure markets he can stabilise UK public finances without inflicting devastating damage on public services. Bloomberg's Lizzie Burden joins us now from Westminster. Lizzie, give us the big picture then. What can we expect to see in this fiscal statement today?
And what we can expect is austerity on steroids. Most of this statement seems to have already been briefed. That's classic Rishi Sunak from when he was Chancellor. And the new Chancellor, Jeremy Hunt, has said that we're expecting eye-wateringly difficult decisions in terms of spending cuts and tax rises. Apologies, there's the same old protester that we see every week in Westminster behind me. But the reason that Jeremy Hunt is having to make these decisions is, it is, Steve, indeed, this gaping hole in the public finances. And I was speaking to the Treasury Select Committee Chairwoman, Harriet Baldwin, earlier. Here she is explaining why that's so important.
It's really important that the UK demonstrate today that we can pay our way, and after the guardrails, as you put them, sort of slightly fell away during September and October, that we are back on track and well guarded on all sides by the institutional strength of the United Kingdom.
But Jeremy Hunt is facing into the storm, as we have been briefed. He has to tame inflation, but that will require weighing on demand. So it's a very, very fine line between pleasing the markets and pleasing the voters.
Yeah, I don't envy Mr. Hunt. It's going to be very difficult. Where could we see some surprises, Lizzie?
Well, there are lots of questions that we're waiting for the answers to. What will be the balance between tax rises and spending cuts? How much of this fiscal squeeze will be backloaded until after the 2024 general election? Who's going to bear the brunt of these tax rises? Who actually has the broadest shoulders in the government's mind? And is the Chancellor going to overcompensate in terms of plugging this fiscal gap? That will all be very closely watched by the markets, but really we also need to see, are they over-relying on this closeness now renewed between the Treasury and the UK's economic institutions? Are they taking liberties with the dullness dividend?
All right, Lizzie, thanks very much. Bloomberg's Lizzie Burden there reporting on the autumn, what do you call it? The autumn statement?
Correct.
The autumn statement coming
Nailed
out.
it.
All of a sudden, we all know what this is after, well, Liz Truss did one great thing for the UK. All right, Ukraine's president, I should say, Volodymyr Zelensky, has laid out his conditions for peace. Zelensky says a ceasefire won't be enough, and only the return of territory taken by Russia will allow an end to the war. Speaking at the Bloomberg New Economy Forum in Singapore, Zelensky also weighed in on the missile that struck Poland earlier this week.
I don't know what happened this time. We don't know 100%. I think the world also doesn't know what happened 100% in that situation. But I'm sure that this is a Russian missile, and I'm sure that we were launching the air defense missiles, but we can't say specifically that this was the air defense of Ukraine, although we're grateful for not being blamed because we are fighting against Russian missiles on our territory. But nevertheless, we have to be fair and honest. Until the investigation is over, we can't say what kind of missile or what pieces of which missile fell on the Polish territory.
Let's get to Bloomberg's Anne-Marie Horder. She remains in Bali after the G20 meetings there. So, Anne-Marie, what else did we hear from Zelensky in this speech and the interview that followed?
Well, he's really just rejecting these claims by the U.S., Poland, NATO, that for sure what it looks like in terms of the evidence that this was a Ukrainian defense system that was shooting down a barrage of Russian missiles that ended up in Poland. And what Zelensky says is he wants Kyiv to be a part of the investigation. He also wants to send Ukrainian officials to Poland. But the president, when he landed back at the White House overnight, very late last night, he said that's not the evidence. So the U.S. is looking at the evidence. Several U.S. officials said this is what it does seem to be. They obviously call this an unfortunate situation. You've heard that throughout the past 24 hours. But it's kind of an intense, tense, awkward moment because you have Zelensky really pitting himself in terms of what happened in Poland against his main allies, and that is, of course, the U.S. and all of NATO.
Back in Washington, where you spend most of your time, Anne-Marie, we have, of course, changing of the guard in a sense in the House, the GOP retaking the U.S. House by a slim margin in a power shift in Washington that stops short of the Senate, of course. What difference does this make?
Yeah, they got that magic number 218 yesterday, and a Republican was able to maintain his seat in California. It is not the red wave that the Republicans were predicting, but still, a majority is a majority, and that means they have control of these councils that will be able to subpoena either individuals from the Biden administration or also his family, individuals from the Biden family, including potentially his son, Hunter Biden. This has been something the Republicans have been talking about. So that is what you can expect. When it comes to the markets, what everyone really will probably start to focus on is the fact that we have the debt ceiling issue, and the Republicans may use this opportunity to use that hostage to force the president to enact spending cuts. But the president on Air Force One, on his way home from Bali, where I do still remain, this is what he had to say when the Republicans clinched the House. He said, "I congratulate Leader McCarthy on Republicans winning the House majority and am ready to work with House Republicans and deliver results for working families." So the president says he will work with anyone when it comes to tackling big issues. Another important moment. This, of course, means that Speaker Pelosi will no longer be Speaker, and she says, her office says, she has an announcement today about her future plans. So stay tuned for that.
All right, Bloomberg's Anne-Marie Horder still reporting from Bali. Thank you so much for joining us. Let's turn now to the world of crypto. Former FTX CEO Sam Bankman-Fried is telling his side of the company's collapse, and he's doing it through a series of tweets. SBF admitted that FTX got overconfident and careless and said he would do his best to save customers' cash. And Matt, just to give a little color on what he said exactly happened, he essentially said the crash came in a few-day period, a historic crash, almost 50% in most correlated assets, with no bid-side liquidity at the same time that there was a run on the bank. So in summary, $13 billion of leverage, total run on the bank, total collapse in asset value all at once, which is why you don't want that leverage. So basically just kind of a worst nightmare scenario, and we continue to see the dominoes falling in the crypto world.
Yeah.
BlockFi, Genesis, Gemini.
Yeah, and I think it's really interesting that you see Gemini and Genesis getting hit as well. So these are more people that we thought were very serious players. I'm not saying they aren't, but they definitely were willing to take exposure to Sam Bankman-Fried just through his fame alone, as he said he was on the cover of every magazine. The thing I find really fascinating is that it seems as if SBF is still under the impression that Serum, Solana, and FTT that he holds on his balance sheet, or that FTX or Alameda hold on their balance sheet, is worth $3.3 billion. Like, he doesn't understand that the value of that stuff has just dumped.
Yeah, absolutely. Interesting stuff. And then to think about where we go from here, what role does Binance play? And I know we talked in the past about what role there is for consolidation in this sector, what need there is in a world that likes to remain decentralized. What happens when you centralize so much of it under one person, under CZ? And we now see Binance is preparing a bid for Voyager Digital, at least according to CoinDesk. Kaylee.
All right, Anna, so definitely continuing to keep in mind all the twists and turns of that saga. But let's now take a look back at the equity market and some stocks moving in pre-market trading here in the U.S., because there's a trio of them moving to the upside after earnings. The first being Cisco, which topped estimates and gave a bullish revenue forecast, signals that there is still technology spending going on among corporate customers. That stock up about 4%. You also have NVIDIA higher after its results. Yes, there is softness in the PC chip market, but AI and data center business really giving a lift to the company's revenue. So they also topped expectations, and that stock is higher by about 2.3%. And one final stock to mention, Grab. This is the Southeast Asian ride-hailing company. It reported a smaller, narrower loss than expected. Cost cuts finally kicking in and helping with that bottom line. So that stock up about 2.5% before the bell, Anna.
Coming up on the program, we'll focus in on what to expect from the autumn statement today, a budget by any other name, basically. Chris Hare joins us, HSBC senior economist. We'll get his perspective on what the UK does from here. How big is the hole in the fiscal story here in the UK that needs to be filled by the Chancellor today, and what role will fiscal drag play in filling it? We'll get to that shortly. This is Bloomberg.
While Teslas and the like make for good headlines, the reality is that even if every car on the roads today went electric, it wouldn't be enough to curb global emissions to avoid catastrophic climate change. Greenhouse gas emissions from transportation account for about 29% of total U.S. greenhouse gas emissions. So what about the other 71%?
Buildings across America burn fossil fuels to operate. What we want to do is make that all electric. Instead of burning oil and gas to give us the energy and electricity we need, we want to do 100% clean energy, all electric. We want to turn buildings into Teslas. Just like a Tesla or an electric vehicle is all electric with no fossil fuels, we want to do that with our buildings. And if we can do it in one building, we can do it in all buildings. And if we do it in all buildings, we'll reduce 30% of U.S. greenhouse gas emissions.
Bloomberg is live at COP27 in Sharm el-Sheikh, Egypt. Bloomberg Television and Radio brings you continuing coverage as world leaders, business insiders, and decision makers gather to take action toward achieving the world's collective climate goals.
What are your top 3 priorities?
There is an ability always to find the new and innovative ways to meet the challenge and at the same time take into consideration the pressures that exist.
Special coverage continues only on Bloomberg, your global business authority.
Welcome back to Bloomberg Surveillance, the early edition. I'm Matt Miller, Kaylee Lyons here in New York, Anna Edwards with us out of London, and the focus is firmly back on the UK today. We're all looking forward to Jeremy Hunt's autumn statement. I have a chart of debt to GDP, and it's interesting to see that the UK is actually doing really well compared to the US. We're looking at just about 99% debt to GDP for the UK in white. In blue, the US is showing 129% debt to GDP. Of course, we have, the world reserve currency here, but the UK is actually the second lowest debt to GDP in the entire G7. So as far as rich nations fare, it's doing quite well. Plus, its duration is much further out, right? It's not just about how much you owe, but how long do you have to pay? But nonetheless, it's still important to pay attention. Noor Al-Ali joins us from Bloomberg Markets Live. Noor, should we be freaked out about this, or is Jeremy Hunt, going to do okay today?
Morning, Matt. Well, look, you're absolutely right. If you look at credit default, the credit risk gauge for the UK, which is the 5-year CDS, you'll see that it's come down from the highs. You're seeing that markets are comparably a lot less panicked, or, they're much calmer coming into this budget session compared to, well, the recent episode that we've seen in recent months. So, from what I'm seeing, there's a lot more calm, but the prospects for the UK economy in the short term and into the next year, now that is concerning.
Yeah, that's interesting, the prospects for the economy. And Noor, in terms of what we look for today, I've had mixed views when I ask people how much the profiling matters, how much it matters if the pain is front-loaded or back-loaded. And some people say the market's attention is really on this, and other people say, no, I don't think it's going to matter too much. I think the UK is gaining back the market's trust and it'll be all right. What's your perspective of what matters today?
My perspective is on the ground, Anna. It's incredibly important to strike that balance today for Hunt. He's going to talk about a storm that the UK is headed into today. You're seeing the cost of living crisis, come in with the energy crisis, which, appears a lot less of a crisis at the moment for this winter. But what about next winter? And also you have that economic slowdown and those fears. The BOE, steadfast on raising rates right now, industrial output coming down lower. Yeah. It's a really bad picture right now in the UK.
Well, on the subject of the BOE, Nor, in theory, if you have more tightening on the fiscal side, that means monetary policy has to do less, no? So what are the BOE pricing implications here?
Well, the BOE appears to be set on the plan that it has put out some time ago. They are the first, developed central bank to actively sell their holdings. That's QT, starting out. They are raising rates, and perhaps not as aggressively as we've seen from the Fed. And inflation has not been reacting in the way that it had reacted in the U.S. It came in at 11.1% yesterday. It's again a fresh record of 40-year high or so, and it would have come in at 13.8% had it not been for the support that we've seen on the energy front. So, we've had, for instance, Hugh Pill and Catherine Mann come and discuss the forward view. They're saying perhaps some pivot or some easing towards next year or the year after. But to be honest, right now, if you're looking at the market, you're looking at the pound, approaching 120. It has come off that right now because the dollar is stronger. But I'm not seeing a lot of, positives there for the pound.
Okay. Noor, thanks very much. Noor Al-Ali of the Bloomberg Markets Live team. And the team will be providing lots of coverage, of course, of the autumn statement. We'll bring that highlights to you here on Bloomberg TV. It'll be across the terminal. For more market analysis, check out MLIV Go. That is the function to use on the Bloomberg terminal to find the Markets Live blog. This is Bloomberg.
has enhanced search on the terminal to deliver what you need when you need it. Now, you can simply type phrases in everyday English in the command line. Compare financials. Find people. Analyze markets. You can enter phrases or ask questions. What do you want to know today? Ask a question or visit SearchGo to find answers now.
In the past 2 decades, China has built large infrastructure projects in almost every country in Africa.
African governments themselves said, we are tired of aid and charity. We want to do trade. We want to be treated like partners. The Chinese came along and said, great, we don't do aid and charity. We want to do business with you.
Global Gateway will mobilize 300 billion euros till 2027.
Now the US and Europe are answering back with their own infrastructure initiatives to counter China, but African experts are skeptical.
China has been that guy around the corner with, a bouquet of flowers to Africa, the US, Europe and the UK have time and time again said, be careful of the flowers you see out of the window, they have thorns on them.
Multi-trillion-dollar industry. There's a lot of ground to cover.
Commodities got absolutely crushed.
We'll show you what's happening in ETFs like no one else. Bloomberg ETF IQ. Monday on Bloomberg. Welcome to the world of decentralized finance.
I'm going to take a look right here at regulation.
We are seeing digital currencies under some pressure.
Bloomberg's covering all things crypto. The people.
I want to have some of my money outside of the sovereign.
The transactions.
It all comes down to the details here.
And the technology.
How does that affect disruptors like you?
What happens to everything that you're investing in when the last Bitcoin is mined?
Bloomberg Crypto, Tuesdays.
This is Bloomberg Surveillance Early Edition. I'm Kaylee Lyons with Matt Miller in New York and Anna Edwards in London. Now keeping you up to date with news from around the world, here's the first word. In Europe, auto sales rose in October for the 3rd month in a row. Still, there's concern that deteriorating economic conditions are starting to put off buyers. New car registrations climbed 14% last month. Europe's energy crisis is driving up costs and standing in the way of a more substantial recovery. The former chairman of Twitter says Elon Musk could be creating room for competitors. Patrick Pichette says that could happen if Musk breaks the ethos of the company. He told Radio Canada it's too early to tell if Musk will be good for Twitter. In the Senate, legislation protecting the right of same-sex couples to marry advanced with Republican support. That sets it up for passage by a simple majority vote as soon as this week. Democrats say the bill is necessary because of the chance a conservative Supreme Court could overturn the ruling that legalized same-sex marriages. And there was a surprising public confrontation at the G20 summit in Indonesia. China's President Xi Jinping accused Canada's Prime Minister Justin Trudeau of leaking details of a private meeting between the two. Xi told Trudeau the leak was inappropriate. Trudeau responded that Canadians believe in free, open, and frank dialogue. So as we continue to monitor geopolitics, we're also focused on domestic politics and the fiscal equation in the UK with the autumn statement due in just about an hour. We'll discuss with Chris Hare of HSBC. This is Bloomberg.
the standard way venture firms work is you commit capital, let's say over a 5-year investment period, something like that.
Yeah, exactly. Right.
And then the fund is typically lasts maybe 10 years or so.
15. Well, these days longer. So often 15. Often the tail extends out to 20 years because these companies take a long time to develop.
And somebody that invests in a venture fund today should be trying to get rates of return of 20%, would you say, or more?
You know, top-end venture is sort of 3x net of fees. You know, ideally you're hoping for more than that. You're hoping for 5x or more. You know, you're illiquid the entire time, right? So you'd hope to get paid for the liquidity.
And today,
so yeah, maybe 20 to 40% if things go well is sort of baseline.
Let's take another subject. Let's suppose somebody says, I don't want to invest in Andreessen Horowitz. I want to be Mark Andreessen. How does somebody become a venture capitalist? What are the skill sets for good venture capitalists? There's a high degree of intelligence, hard work, a lot of luck, dress the right part, don't wear a tie. What are the things that make one a good venture capitalist?
So the highly successful VCs historically are very idiosyncratic. You have people from very different backgrounds. Mike Morris is a former newspaper reporter. John Doerr is a former chip salesman. You've got people with very different. Jim Breyer has more of this kind of blue chip investment background. You have people with very different backgrounds and experiences. And so I think it's some set of skills and some set of knowledge, and then there seems to be a taste component to it that's really hard to measure and really hard to predict.
This is Bloomberg Surveillance Early Edition. Here's what you need to know. Budget day in the UK. Jeremy Hunt will try to reassure markets he can stabilise public finances without devastating cuts in government services. The crypto crisis spreads. The fallout from the collapse of FTX has now ensnared the billionaire Winklevoss twins. And a power shift on Capitol Hill. Republicans narrowly regain control of the House, giving them the ability to block President Biden's agenda. I'm Anna Edwards in London with Matt Miller and Kaylee Lyons in New York. And Matt, European equity markets a little bit weaker in the early part of the trading session, waiting for the set-piece event that is the autumn statement here in the UK, basically a budget. And looking at US futures, it seems everyone's gone off to make a cup of tea, get a coffee before the budget starts, because there's not really much happening there.
Yeah, I mean, what a better way to spend a Thursday morning than a nice warm cup of Builder's what is it called? Builder's tea, PG tips, and listen to Jeremy Hunt give his autumn statement. Look at the leaves changing color and watch while S&P futures recover a little bit. We're not really much changed, as you can see here, down about 0.06%. We did end the cash trade lower yesterday at 39.52, so moving incrementally further away from that 4,000 level that we eclipsed and then fell back below. The reason is we have headwinds in terms of dollar strength and 10-year yields. Both are increasing right now. You can see the Bloomberg U.S. dollar index at 1278 and the 10-year yield at 373.79 right now. Concern about Fed speakers who've come out and said, don't count on a pause, quit betting on a pivot. It's not going to happen. So as a result, the markets are less ebullient. Bitcoin right now down also very little, 0.05%, 16,522. So hovering on the same levels that we've seen all week long. Kaylee, do you see any pre-market movers?
I do see some, and they're all related to earnings because we still are getting those trickling out, even though the season is pretty much almost entirely over. Cisco being one that reported after the bell yesterday. It beat in the quarter they reported, also gave a bullish forecast, still seeing that technology spending in the corporate sector. So as a result, that stock up about 4%, while NVIDIA is up 2.4% after also beating expectations. It's the AI and data center chip business that's helping offset some weakness elsewhere. And Grab, the Southeast Asian ride-hailing company, had a narrower loss than expected. Cost cuts seem to finally be kicking in, so that stock up about 2.5%. Finally, Macy's. This one is reporting in just a couple hours before the opening bell here in the U.S. this morning. Of course, we've gotten a mixed bag for the retailers we've seen so far this week, but Macy's is going to be the first real tell on the apparel sector in particular. Ahead of its results, interestingly, Anna, that stock up about 2.5% before the bell.
Yeah, a lot of focus on US retailers this week then, Kaylee. Let's have a look at where we are in Europe. Matt was saying not very ebullient in the futures picture for the US. Well, that's certainly the case here in Europe. European stocks down by 0.2%. Mining stocks taking the brunt of that in London, weighing on London. Siemens helps Germany to outperform them, though. The engineering giant up by 7%. They reported numbers, and it seems that it's the factory automation side of the business that is structurally doing pretty well right now, at least according to analysts. Here we have the euro and the pound, and both of those are losing a little bit of ground against the US dollar. Maybe that slight tick up in the US dollar once again is something that takes the edge off risk assets, and certainly peak dollar conversations. We've had plenty of those over recent weeks. Interesting to see how far the pound has recovered, though, since that mini budget, so-called mini budget, which had anything but a mini effect on the markets. We went down to 103, which is more where the euro is currently trading, incidentally, but 118 is where we jumped back up to. But we are now waiting for Jeremy Hunt, the Chancellor, to speak, and he will do that we understand, in the next hour or so. We should hear from the Chancellor. Right now, we have Prime Minister Rishi Sunak speaking in the House of Commons, or at least he's getting ready to. He's going to be delivering some remarks. There he is, on his return from the G20 in Bali, giving his thoughts. He, of course, had a meeting with President Biden, and he was quite outspoken in his criticism of China then, Kaylee.
Yep, but Anna, of course, really what we're watching for in the House of Commons is an hour from now, as you said, when we receive the autumn statement from Jeremy Hunt. That has major implications for the trajectory of growth and inflation in the UK economy. Joining us now to discuss it is Chris Hare. He is HSBC's senior economist. Chris, obviously this is a very hard line to walk, where you don't want to do too much restrictive in order to tank growth, but also they need to get spending under control. What is your expectation of what the balance struck will be today?
Yes, it's a really tough task for Chancellor Jeremy Hunt. I think we're looking out for a couple of things. The first is the size of this so-called fiscal black hole that a lot of people have been banding around, figures up to around 60 billion pounds or so. And of course, then how to fill it, what kind of mix we're going to see in terms of tax rises and spending cuts. But I think most interesting for me is the timing by which this fiscal belt tightening will happen. So from our perspective, we think that there's at least a chunk of backloading that's going to happen in terms of this belt tightening, i.e. certain tax rises and spending cuts that we extended out to 2025 or 2026 or so, such that the pain in terms of the macroeconomic headwinds will at least be smoothed out somewhat. But again, that raises a credibility question. If you're backloading your fiscal tightening by so much, then there are questions about, well, will it actually happen eventually?
Yes, especially, good morning to you, Chris, especially as 2025 takes us into a new parliament. That's after the next election. I mean, things as they stand right now, that would be everybody's assumption. So in terms of the Bank of England's calculations, I suppose things that are promised in 2025 might not have much impact. And in terms of the market's thinking, do those promises about 2025 have much impact?
Well, I think at least to some extent, because perceptions about fiscal credibility is not just necessarily about concrete action. Of course, concrete action is important, and we saw that with the unwinding of Trussonomics, which allowed markets to settle. But while we want to see some concrete action over the next 2-3 years or so, it's also about sort of vibes and direction of travel. And if the direction of travel is in the right sort of direction from a market's perspective, and it's one that talks about meeting fiscal targets, even though it's some way off, well, at least markets can think, well, the direction of travel is sort of okay. And when we come to the other side of a general election, it might be quite hard for a future government to really row back on that in a major way. So it has some impact, but we're certainly not looking like massive market panics as a result of this, we don't think.
Okay, yes, well, let's, everyone keeps their fingers crossed, I suppose, unless you're betting on that kind of thing. Let me ask you about fiscal drag, because that seems to be something we're really watching for today. There have been lots of promises in the 2019 manifesto by this government, under previous leadership, of course, that they wouldn't put up various taxes. So that limits the range of movement. They can't put up tax rates, but they can allow more and more people to be caught by taxes.
Yes, that's right. So by freezing income tax thresholds, the think tank, the Institute for Fiscal Studies, said that that could raise up to around £30 billion per year by 2026. So potentially it could be a pretty big revenue raiser, or a very big revenue raiser. But there are a couple of caveats associated with that. First, that's 2026. That's the other side of the next general election. And second, there's a question about, notwithstanding an election, it's still politically difficult to see such big rises in effective tax rates for so many people. So we are looking for other things in terms of potential consolidation. That could come in the form of spending cuts, which could be pretty hefty as we see the announcement in an hour's time.
How bad is the UK going to fare in terms of the upcoming recession compared to, say, continental European countries or the US?
Yeah, well, it's pretty tough times ahead for the UK. Unlike in the US, of course, Europe, including the UK, is facing high inflation driven by an energy crisis and those rising utility bills. So in terms of our UK expectations, well, the UK, we think, is already in recession. We saw a contraction in GDP in the third quarter. That was weaker than in the Eurozone. And we've got contractions over the next couple of quarters, such that there are potentially some bigger UK-specific issues than the Eurozone because we've got the energy crisis, the prospect of fiscal consolidation, very high inflation with food prices rising by over 16% year on year, as we saw in yesterday's data, issues with regards to labour supply, potentially some Brexit issues underlying all of that. So there really is a big list of UK economic headwinds, some of those UK-specific and not just global.
But does Brexit really make things worse? And is there any possibility of, reversing some of that damage?
Well, with Brexit, it's really difficult. Politically, it doesn't look like there's going to be any major reversal in terms of the Brexit settlement anytime soon. Now, for economists, the job has been really difficult to try to unpick what kind of impact Brexit has actually had on the UK economy relative to COVID effects, for example. There was a lot of discussion of this among MPC members with the Treasury Select Committee yesterday, and it does seem to be that there is certainly some sort of role with regards Brexit on the UK trade story, possibly some kind of effect on the inflation story, which is particularly pertinent at the moment when we're thinking about the cost of living squeeze. So there is something there and potentially some headwinds which could keep blowing for some time to come.
Chris, as we also think about kind of external factors that authorities in the UK and really economic authorities around the world have to think about, I wonder how you're thinking about China. We heard from the PBOC overnight warning about inflation, saying that a recovery in demand in the Chinese economy could fuel that. And in theory, that could be exported elsewhere. How are you thinking about the China reopening story and how that could exacerbate some of these price pressures that economies like the UK are facing?
Yes, for UK and Europe, the impact of China on the economy is a kind of multifaceted sort of thing. Of course, for a lot of European exporters, this is a good news story. If there's a sharp reopening in China, that could help broader domestic spending in China, but that might also have some spillover effects in terms of the exports that Europe sends to China. But then at the same time, stronger growth in China puts upward pressure on commodity prices, and that might be an inflationary impact. I mean, overall, when we're thinking about the UK in particular, those exposures to China aren't necessarily a first-order issue. But, I think overall, if we're thinking about stronger growth in China, a rising tide lifting the global economy, it should overall be a good thing, notwithstanding the fact that it might create some inflationary pressures along the way.
Chris, thanks very much. Thanks for joining us. Chris Hare of HSBC. And stay with us. We'll bring you coverage of Jeremy Hunt's statement, of course. The UK Chancellor will be speaking to the House of Commons. It's usually a rowdy affair. Plenty to watch for in terms of that UK autumn statement. What will it do to UK assets? This is Bloomberg.
When you think space, you probably think one space agency that travels under the radar is ESA, which is surprising considering what the European Space Agency has achieved and how vital it is to the global space industry.
We've collaborated with pretty much everybody who is involved in space exploration.
ESA wants to be a leading force in furthering humanity's mission into space.
Commander Ground, do you copy? Copy.
If we want to have successful human missions to Mars, we are going to have to learn to live and work off-world in a different way. The place where we are going to learn to do that is on the moon.
Can ESA help humanity take its next giant leap?
Access the financial world on demand. Hear from leading economists, policymakers, and industry experts via live and on-demand webinars, only from Bloomberg. Start exploring to see what's moving the markets. Visit Bloomberg.com/webinars.
This is Bloomberg Surveillance Early Edition. I'm Anna Edwards in London with Matt Miller and Kaylee Lines in New York. Let's keep our focus on the UK. The Chancellor, Jeremy Hunt, delivers his autumn statement in the House of Commons today, within the hour, in fact. Joining us now to discuss, Marcus Ashworth, Bloomberg opinion columnist. And Marcus, you've been writing about the difficult choices that lie ahead. You say the government knows it can't risk a repeat of the recent meltdown in gilt. What does it need to make sure it does today to avoid that?
I mean, normally I wouldn't be the type of person advocating austerity when we're clearly in a recession and probably going deeper because of this autumn statement. However, the premium that was built up on gilt assets is so ruinous that we saw, a month or so ago, that they have been allowed by the markets some faith that they are going to correct that and fill the fiscal black hole and do something sensible with regards to getting the balanced budget in at least 5 years' time. So they have to deliver on that. And that means they have to do some nasty things now. They can't push it all out beyond 2025. You were discussing before, past the next election, no one believes spending cuts out then. And likewise, the credibility has to be kept by the market, so they're not going to see just some future measures which are possibly never going to happen. So they have to do some nasty things now. There is some benefit from that, because if the OBR recognises it, that feeds directly into the Bank of England's models, and hopefully the Bank of England doesn't have to hike interest rates so much.
Okay, so that's the link between the fiscal and the monetary and the way that they might support each other here then, Marcus. So thinking about where this heads next, you've set out why the profiling then matters to you when you think to the markets. What about the level of political support that this budget can achieve? Because there's no point in presenting something that's not going to get through the House. So how will the market be thinking about that?
Yeah, so the cunning balance between doing enough now to get some benefit from the OBR to then get benefit from the Bank of England, and we're completely trapped in this sort of econometrician's black box, falls apart when it hits the reality of getting it through the House of Commons. Now, one imagines that they have got this through in the sense that they've done enough works with the whips to make sure that people will vote. We saw one MP question whether HS2 should go ahead and possibly withhold her support for it. But beyond that, this is going to be a very difficult finance bill to get through, and I think there are going to be some troubles here. Nonetheless, what we want looking for is quite what if they do a bit harder now, how much room that might give them before the next election, late 24, to have done some easing back of this. And that, again, all depends on these OBR forecasts. They all sort of link in a horrible loop. If he gets it right, he'll be lucky. If he gets it even a little bit wrong, it all falls apart, especially if we get a worse recession.
How badly could it fall apart? I mean, I realize you've got sky-high inflation, and Rishi Sunak doesn't even want to give nurses a raise, but the pound has come back to 119 now. Your debt to GDP is very low compared to other rich countries. The duration is double of your debt is double what it is here in the U.S. You got much longer to pay it off. It doesn't seem that bad, Marcus.
Yeah, until you get the fact, the Achilles heel, basically, of what happened a month or so ago, when everything fell apart really very quickly indeed. And I think a lot of the rest of the world were looking again about, one, how could this possibly happen in a major economy like the UK? Two, could this happen to us? And so the point is, they've got to play it very, very straight, very sensibly, no rabbits out of hats, because we have to keep that gilt yield down to a level. Otherwise, the cost of funding is what is going to kill the back end in 2026, 27. The cost of funding is going to add an extra potential 50 billion. They've got to get that down, keep that down, which means the Bank of England hopefully won't hike interest rates as much. So it's a very painful exercise. Things can go very badly wrong. We've seen that. I think the real risk here is that, one, they may not get, the Tory party falls apart again, or secondly, because of that recession, if they overdo it. So I don't know how they're going to balance this, but these are some very clever people. We saw what Rishi Sunak did with furlough scheme. I'm hoping against logic that they find something we haven't all thought of yet, and that somehow the things can all add up. But not sure I've got that much confidence.
Well, Marcus, as we talk about kind of a spectrum of outcomes here, what about the spectrum of inflation? How much could it change in trajectory depending on the policy that Jeremy Hunt outlines today?
Oh, well, I mean, if we hadn't had the Liz Truss sort of blanket energy cap, we would be looking at close to 14% inflation, which rather than the 11.1. So I think, and it's a very bold call, we've probably seen the top of inflation in the UK. And that is, it might be sort of hanging around here for the next 2 or 3 months, maybe a bit longer. Well, inflation is set to plummet later next year, and possibly by 2 years' time to be one below the Bank of England target and even close to zero. So, you know, the Bank of England doesn't need to do too much more, but they've got to be convinced at 11% inflation that the government's got the government finances in control so that they can have the confidence to look through some stuff and maybe not hide quite so much.
Okay. Thanks very much, Marcus. Very good to speak to you. Linking the fiscal and the monetary. Bloomberg Opinions, Marcus Ashworth. Thank you very much for joining us. Just want to take you through a few lines we're getting from Rishi Sunak after the G20 in Bali, talking to the House of Commons ahead of the fiscal statement today, saying that China poses a significant challenge to our values. Also talking about trade deals, saying that he won't sacrifice quality for speed on trade deals. Perhaps that's in reflection of some within his party who've criticised his predecessor, Liz Truss, for perhaps setting deadlines around trade deals, which didn't necessarily work in the UK's favour. That's the UK Prime Minister. More from the Chancellor shortly. This is Bloomberg.
Steve's ability on the course may not be etched into any record books, but following him around, it's clear that it's not for lack of trying.
Jeez.
We were constantly hustling behind him as he caught up with executives in the portfolio companies and reminisced with former and current players.
He's a day trader. He caught himself self-made day trader. Yeah. And so he's on the bus after a game in New England, and he's day trading on the bus, and Bill Belichick sees him and cuts him on the spot.
You know, in many ways, it's a convention, right, of the people that I don't see maybe once a year. And so it's kind of all come together. My firm, our charity, our fundraising efforts, and then the friends that are around. My dad and my brother, it all happens right there as a confluence of all these parts of my life that have found its common center.
You will shed light on dark matter. You will make aging optional. You will turn 5G up to 11. Because when you subscribe to Bloomberg, you won't just get news. You'll get insight into limitless possibilities, knowledge, and inspiration to feed your ambition. So before you invent, pioneer, disrupt, before you change the world, Bloomberg.
Why do the biggest names in business choose Bloomberg?
That is a great question.
It's a great question.
Great question. Great question. Best question I get all night.
Bloomberg, top experts, great questions.
We would really want to hear that the perpetrator country is the Russian Federation. We would be happy if the state could be named state.
China and the United States, as two major countries, both stand to gain from cooperation and lose from confrontation.
We're at the beginning of a bridge building effort.
As we look at supply chains around the world, they were fit for 20 to 30 years ago.
The central banks misread the signs. They misread the risk of persistent and much higher inflation.
My team, for choice, thinks 2023, we avoid a recession. I'm a little more skeptical.
We're going to have new and improved data access protocols such that only an entity of U.S. residents that in the U.S. will have access to a certain set of U.S. protected data.
Crypto industry has been cut to ribbons this year. It's just too risky to sit out with a bunch of cowboys who have managed to blow themselves up.
That's just a few of the highlights from the Bloomberg New Economy Forum that took place in Singapore this week. Now let's get a quick check on what is coming up ahead on this Thursday. Alibaba will be reporting its earnings results at 6:30 a.m. New York time, plus retail earnings continue with Macy's reporting before the bell. On the economic data front, we'll get some here in the U.S., including housing starts and building permits. And finally, we'll hear from more Fed speakers, including St. Louis Fed President Jim Bullard and Cleveland Fed President Loretta Mester. But as we all have our eyes on monetary policy, we also are watching fiscal, especially in the UK, as we await the autumn statement from Jeremy Hunt in the next hour. Let's get over to our markets reporter, Valerie Teitel, who has taken a look at the implications for the gilt market. Valerie?
Yes, thanks, Kaylee. A key thing for the gilt market today will be the update from the Debt Management Office on the gilt remit, which is the issuance they expect for this year and next. Now, interestingly, the survey estimate from Bloomberg that we conducted only showed a 5% decrease in the issuance versus in September. Now, remember, these September numbers were shocking for the market. It was near $200 billion of expected gilt issuance this fiscal year. And so the market has only really taken that down by 5%. We're still expecting a lot of issuance this year and next. And Citi, specifically, the strategists at Citi actually expect the number to be elevated over the next 2, 3, 4 years. Now, one might say, well, given these estimates are still high for gilt issuance, why have gilt yields retraced so much? But, you know, this is coming at a time where there's been two key things that have changed. The UK, their terms of trade have rebounded sharply. So that massive hole in the current account deficit we were worried about, we're no longer too concerned. And also, the U.S. inflation data looks like it's cooling. That's allowed the dollar to soften, treasury yields to lower. So it's a much better time to be confronting the market with this issuance. But if what Citi says, for example, is correct, that it's not just this year of the issuance, but the next 2, 3, 4, you know, the UK government still has to tread quite carefully when they approach the market with these issuance numbers.
Valerie, thank you very much. Bloomberg's Valerie Teitel there. And Kaylee, interesting point then from Valerie in terms of the global backdrop in bond markets to what the UK is doing here, trying to regain that lost credibility with debt markets, with gilt markets. And the backdrop globally is more conducive to doing that, it seems. Although, when you look at markets today, we seem to be back to worrying about some of the things we were doing before we saw a rally in risk assets, worrying about Fed tightening, once again, worrying how long it goes on for and where it gets to.
It always seems to come back to that, doesn't it, Anna? When at the end of the day, we're trying to assign a narrative to the market action, it's always like, oh, well, the Fed and what those speakers are saying. So we'll definitely have to watch for that today. But we are seeing futures right now at session lows, down about 0.5% on S&P E-minis. The 10-year yield right now, Anna, at 3.73.
That is it for Early Edition. That's it for Matt Miller, Kaylee Lyons, and for me here in London. We will leave you with the surveillance team. They will be bringing you coverage, of course, of the autumn statement here in the UK. Lots more to talk about on the markets as well. This is Bloomberg.
what do you say to the cynics that say, look, it's all nice and fine, but a lot of it is greenwashing, and you're not a good company, you're just a less toxic company than some of the other oil majors?
Well, the first thing to say is that, you know, I'm a big believer in we need to put ourselves in other person's shoes in life in general. And so I understand that point of view, and I get that people have that perspective. I don't agree with that, obviously, but I understand where they're coming from. We have an enormous challenge as society, which is to provide the world with reliable, affordable, and clean energy. That's what society wants. That's what society needs. And I believe in my heart that a company like BP is actually one of the few companies in the world who can actually make that happen. We can talk about the things that we're going to grow and over the coming years, and I find it hugely exciting and energizing for our organization. But that's what the world needs, and you simply can't go against the grain of society. You can't defy gravity, and that's why we're making the change that we're making.
Markets countdown in Europe. From the financial centers of the world, Bloomberg Markets European Close with Guy Johnson in London and Alex Steele in New York. Real-time numbers, real-time analysis. Weekdays.
Every Friday with 30 minutes dedicated to fixed income, I'm Jonathan Ferro. This is Bloomberg Real Yield.
This could be somewhat of a shallow recession, but more prolonged period of downturn.
The market is going to continue to heal over the next year, but you're still going to have a more volatile environment.
The covenant soft landing, maybe it will happen. Maybe we have the disinflationary forces.
It has to go all the way to 2 for the Fed to be able to truly step off the brakes and allow for a neutral policy.
We're all certainly trying to figure out when the point is correct for the Fed to slow down, when the tightening is going to slow down.
This is Bloomberg Surveillance with Tom Keene, Jonathan Ferro, and Lisa Abramowitz.
Good morning, everyone. Jonathan Ferro, Lisa Abramowitz, and Tom Keene. Thank you for joining Bloomberg Surveillance on radio, on television. It's boring out there. It's Thursday. Claims, yes. We'll get some housing data. Forget about it. Absolute history in the land of Bramo with curve inversion, our #1 story today. Lisa, you nailed this yesterday on a tweet. We go back 40 years for the unusualness of this moment.
The significance of this is we're looking at a slowdown. How steep is the slowdown going to be? What are the contours of it? Will it be short and shallow? Will it be long and shallow? Will it be deep and short? All of these questions of how much pain do we have to yet see? And then you have a lot of people trying to push back against that and saying the earnings haven't been so bad, and when they haven't been so bad, you get sometimes a surprise rally.
I got 8 questions, you folks. This is the wheelhouse of the unknown Bramo years ago at Bloomberg News. This is really what she does absolute best. We're going to advance that conversation. Ira Jersey will join us later. Ian Lingen will join us from BMO Capital Market on what you need to know about 63 basis points of inversion. How does it filter out into investment grade credit, high yield credit, and that? Does it filter out into your real world?
If you take a step back, the reason why this matters so much is that if people are getting paid more to go into short-term debt, to basically lend for 1 year or 2 years, they're earning substantially more than going out and lending for 10 years. What does that say about the prospects longer term, and where are people going to put their money? They're going to hide it. They're not necessarily going to have the conviction.
That's what this is about. That's really well said.
Yeah.
This is about cash under the mattress. I got to park my money out 20 years, which, folks, leads into the auction yesterday of the 20-year, which actually
was good.
Mattered. It's time now for Bloomberg Surveillance auction talk. Let's go there.
Literally.
Explain to mere mortals like me why the 20-year auction yesterday falls into Ian Lingen's shock of massive inversion.
The one consensus right now that we keep hearing from guest after guest, buy long duration. That is a new consensus. People have tried it before. They've gotten their faces ripped off. And here we are. We're doing it again. And people saying, regardless of what's happening, based on the Fed speak that we've been getting, they are convinced, they are committed to torpedoing inflation, whatever it takes, even if there is some sort of significant downturn.
So on a quiet day, it's not quiet. In the land of fixed income, it's a huge, huge day with historic curve inversion. Ira Jersey, again, looking for Volcker-like inversion possible. I'm going to put the word possible on that. It's also possible the Chancellor of the Exchequer will move the market in London and will move sterling, pricing in on the Bloomberg at a rounded up 119 this morning. Guy Johnson says this is an important speech.
Well, it's important because we've all been looking for what sort of fiscal austerity we're going to get from the United Kingdom in the face of inflation at 11.1%, the latest CPI read, right? How much do they have to cut back spending in order to appease really the gilt market and frankly the pound market, the FX market? How much do they have to respond to something that Liz Truss could not respond to? And then what is the response if they just cause an even deeper recession? Is that positive for the pound or is that negative for the pound?
We're going to jump to this at 6:30 here. You're going to see it here on Bloomberg where the Chancellor will announce. We'll have all the headlines of that, and then Guy Johnson will translate for us from London. What I find fascinating here is it's austerity, but we've never had austerity with the full employment that we have right now, or at least the full employment we see in November.
How quickly is it moving? And one of the big mysteries heading into 2023, how significant are the lag effects? How much are we going to feel the burn of whatever the Fed and central banks around the world are going to do? Gita Gopinath, really excellent on this over at NEF in Singapore, talking about how we don't have a sense of how much you're going to end up with all of these together moves from our central banks around the world, what the effects are going to be and how dramatic.
Through the hour, we'll get through this. John Williams of the New York Fed with some important comments yesterday along the line of Dr. Gopinath as well. Futures at negative 20. The data, I mean, it's there. The curve inversion is the lead story, negative 64 basis points. 10-year yield 3.73 at a 3.69 yesterday, showing price up, yield down, going for that long-term duration. Oil doesn't give me a story, $92 on Brent. And foreign exchange with one big muddle, one big churn here. Sterling as we go to Jeremy Hunt. It's 6:30, 118.56. I need a brief because I'm focused on claims and housing. What else is going on?
It's the reality television show that is Fed Speak. I mean, honestly, every day
I didn't know that.
It's live blogging at the Federal Reserve. It is the reality TV, Federal Reserve officials. They're just like us. But honestly, every single day, the rhetoric, the drumbeat coming out. Today, it includes St. Louis Fed President James Bullard, Fed Governor Michelle Bowman, Cleveland Fed President Loretta Mester, Fed Governor Philip Jefferson, and Minneapolis Fed President Neil Kashkari. And tonight, if that wasn't enough, Charlie Evans is having a retirement party from the Chicago Fed. There'll be remarks from Jay Powell, John Williams, and Mary Daly.
From the chairman.
It's not going to be anything that's substantial in terms of monetary policy. It'll be, we appreciate you, Charlie. Thank you for being with us, et cetera, on your exit of the Chicago Fed. It's interesting. This has actually been moving markets more than anything else. What's your skepticism?
Here, bring it up again here, folks. And on radio, we're bringing up all the faces of the Speakathon today at the Fed. John Williams yesterday not linking financial stability into monetary exercise. The PhD from Indiana, newly minted Michelle Bowman, Loretta Mester, an arch mathematician from Cleveland, Philip Jefferson with terrific social economic credibility as a Fed governor, and the aerospace engineer from Minneapolis. I mean, everybody's got a different background. Everybody's got a different story.
And we're all listening because that has been moving the markets probably more than anything recently. Economic data out today at 8:30 a.m., including October housing starts, building permits, as well as initial jobless claims. And then at 10 a.m., we get October home sales. I'm watching the home data.
Yes.
Because the housing market, to me, is one of the biggest financial risks I keep reading about. We'll dig into it more coming up. But I also want to mention we're getting retail earnings. Macy's at 6:55 estimated this morning. Kohl's at 7, Ross Stores at 4 p.m., Gap at 4:15. How much are we looking at a bifurcated of the haves and the have-nots, a bifurcated picture among the retailers, and how much are we getting a sense this holiday season might not be so great?
Wasn't Dana Telsey fun yesterday?
She was great.
Retail.
We should get her back
Just
on.
really capturing the moment. I want to do this right now with a brief as quick as I can, and I'll re-mention this every hour. The best tweet yesterday, Jason Furman teaching Act 10 up at Harvard, and he says there's two core inflations out there. Lisa, there's a core inflation of 5.8% based on existing leases, and the new spot market lease core inflation is a stunningly low 2.8%.
Yeah, how quickly can we get back
Retweeted
down?
by the laureate Krugman. And so that's really important for housing. Let's get to it right now. In foreign exchange, Vasilios Giannakis joins us, head of European FX strategy at Citigroup. We have austerity and an austerity speech in the United Kingdom, Vasilios. Tell me about the new austerity you see and what that will do to the dollar.
Well, as far as the UK is concerned, I think potentially we've swung the pendulum from one side, where we had point out mini budget that was judged to be, to a large extent, irresponsible, and it created that currency crisis, confidence of crisis, as I called it. But right now, obviously, to appease markets and to restore part of the lost credibility, potentially we're moving towards the other end. I think what is important, that there are a number of points that are actually important in the budget announcement that we're going to get. First of all, will it go deep enough? Will it go far enough in terms of the actual austerity measures? And everything that we're reading and all the headlines that we're seeing suggest that it will. And in that respect, it will actually be a fiscal package that will aim, to a certain extent, to basically fight inflation. So in a sense, you're going to have monetary policy and fiscal policy moving together, which brings me to the second point, that this alleviates part of the pressure from the Bank of England to be very aggressive on interest rate hikes. And, you know, I've been saying this for quite some time. I don't think that the Bank of England has the willingness to go really hard on interest rates, because it's very, very much aware of the impending sharp correction in the housing market. That has been the case in all previous downturns in the UK. The UK mortgage market is very idiosyncratic in its nature. It has a very, very short fixed rate mortgage offering, which means that at every point in time we get more individuals that need to refinance at the prevailing higher rates. I think bottom line, the message Sterling is going to get, which I think has been living in some sort of a too euphoric environment, is that we're heading towards a deeper and longer recession. The BOV is going to reprice lower, and I think ultimately all of that is going to be bad for sterling.
That should be bad for sterling, which really raises this question, because as you were speaking, I wasn't sure where you were going in terms of this is good for sterling or bad for sterling if you end up curbing inflation. At what point does austerity kill the momentum of a currency, and at what point does it support, because it's actually helping kill off the inflation that so many people have been worried about?
Well, listen, I think these things work in cycles. As I said before, I think the austerity is likely to restore part of the credibility. But equally at the same time, there will be a long and deep recession staring sterling in the face. So the recovery in the UK is potentially going to lag the recovery in other countries, which means that you're going to have a reshuffling of portfolio allocations. So at the initial stage of the austerity, it will be a bad thing for the currency. As the austerity progresses, and of course you start seeing some of the benefits of that, being a lower debt to GDP ratio, then that potentially starts setting the stage up for a recovery in the currency. But again, I'll mention this one more time.
Right.
Aside all these things, the UK is facing a structural problem which is deeply rooted to Brexit.
We're going to have to leave it there. Vasilios, we're going to have to leave it there because of time, and we've got to get to 6:30 and the Chancellor as well. Vasilios Giannakis of Citigroup, thank you so much for a brief there, particularly on pound sterling this morning. It will be an austere speech here in about 15 minutes, and then Guy Johnson will follow with analysis. Pound sterling, 118.59, up significantly. Sterling strength off the depths of what we saw as Sunak became prime minister. Stay with us in New York. Lisa Abramowitz and Tom Keene. This is Bloomberg. Good morning.
Keeping you up to date with news from around the world with the first word, I'm Lisa Mateo. More than a week after the elections, Republicans have won a narrow majority in the House that gives them the power to halt President Biden's agenda. Still, their slim margin is a letdown. The party had counted on decisive election results as a springboard for the 2024 presidential race. In the UK, investors will be watching closely when Chancellor of the Exchequer Jeremy Hunt delivers his budget message today. The last British budget, it threw markets into a tailspin because of a large tax cut package. Hunt will be calling for tax hikes and spending cuts aimed at stabilizing public finances. Former FTC CEO Sam Bankman-Fried is telling his side of the company's collapse, and he's doing it through a series of tweets. Bankman-Fried admitted that FTX got overconfident and careless and said he would do his best to save customers cash. FTX's new management said Bankman-Fried does not speak on the company's behalf. Ukraine's President Volodymyr Zelensky has laid out his conditions for peace. Zelensky says a ceasefire won't be enough. He also said the return of territory taken by Russia will allow an end to the war. Zelensky spoke to the Bloomberg New Economy Forum in Singapore. And despite an upbeat quarterly revenue forecast, Cisco Systems says it's cutting jobs to, quote, rebalance the organization, and it's reducing office space to align with its hybrid system. The biggest maker of machines that run computer networks and the internet said sales will jump 4.5% to 6.5% higher than expected. Global news 24 hours a day on air and on Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Lisa Mateo. This is Bloomberg.
Gen Z can't seem to get enough of Prada. Loafers, nylon bags, and its Miu Miu micro miniskirt have been flying off the shelves into and onto the arms of young consumers. Fashion tech company Lyst placed Prada second on its fashion index, at its highest ever ranking. So what could be making this over a century-year-old fashion house appealing to a new generation of consumers?
What Prada has navigated adeptly is their overall kind of understanding of how cultural conversations are happening online, their ability to partner with various cultural figures.
Gen Z faces are at the front of Prada's advertising to this new market. Maya Hawke, Hunter Schafer, and Sydney Sweeney will be familiar to any fans of Stranger Things or Euphoria. There could be another factor at play, the environment. Of those surveyed by The Lancet, over 59% of Gen Z said that they were extremely worried about the climate crisis. So, for example, the revival of Prada's iconic nylon handbag using eco-friendly materials may be winning kudos among these shoppers. Of course, Prada and Miu Miu are not inexpensive brands, and as the global cost of living crisis hits, these brands might start to feel a pinch. But, for now, Gen Z seem to be reaching for their nylon handbags and not letting go.
No one covers the world like Bloomberg.
My team thinks 2023, we avoid a recession. I'm a little more skeptical about that.
China and the U.S. both do not want to see nuclear force on the European continent.
The regulators here in the Bahamas are ongoing with their investigation into FTX.
With unmatched reach and resources from more than 120 countries, the moment news breaks 24 hours a day. Bloomberg, your global business authority. When innovation strikes, Bloomberg Technology is there with the news and analysis you need. Every weekday, only on Bloomberg. Bloomberg is live at COP COP27 in Sharm el-Sheikh, Egypt. Bloomberg Television and Radio brings you continuing coverage as world leaders, business insiders, and decision makers gather to take action toward achieving the world's collective climate goals.
What are your top 3 priorities?
There is an ability always to find the new and innovative ways to meet the challenge and at the same time take into consideration the pressures that exist.
Special coverage continues only on Bloomberg, your global business authority. A multi-trillion-dollar industry. There's a lot of ground to cover.
Commodities got absolutely crushed.
We'll show you what's happening in ETFs like no one else. Bloomberg ETF IQ. Monday on Bloomberg. The top names at the Fed are on Bloomberg.
I think it will probably be appropriate soon to move to a slower pace of increases, but we have additional work to do.
Nobody covers the Fed like Bloomberg.
Still pretty much gridlock in Washington, and I've got to say, Lisa, that's a fine story for the markets. The markets can live with this because any progressive legislation that makes it out of the Senate and goes to the House will die in the House.
Greg Villiers of AGF, really brilliant yesterday on this election that continues. There's no question about that. And his note this morning speaks about Speaker Pelosi, and perhaps we will see news on her future today. We're going to get a brief on that and tie it in to international relations with Anne-Marie Horton at the G20 meetings, wrapping that event up, our Bloomberg Washington correspondent in Indonesia. Anne-Marie, I want to link this together in that our editor-in-chief, John Micklethwaite, in conversation with Mr. Zelensky of Ukraine, which comes right over to the first order of business for a Republican House. Do we actually believe the United States will hold back aid to a nation at war?
Well, it's a big question given the fact that yesterday we had the news that the Republicans, even though it's a slim majority, it's still a majority, they have the control of the House now, and set to be Speaker, most likely, if he can get those 218 formally in January, Kevin McCarthy has said that it will not be a blank check no longer for Ukraine. We should note he has also backtracked, saying that he just wants a little bit more scrutiny, but he is going to have to really deal with a divided party. And you have individuals like Marjorie Taylor Greene, the representative from Georgia, saying no more money should go to Ukraine. So that's one of the issues. But we should also note, when John Micklethwaite, our editor-in-chief, sat down with President Zelensky, he's talking about the fact that no one could be 100% sure this was a Ukrainian defense rocket that ended up in Poland. He wants to send Ukrainian officials to Poland. And the president, when he got off of Marine One and before he went into the White House, was asked about these claims from Zelensky. He said that the evidence just doesn't show that.
Interesting. Anne-Marie, I need to talk about the event of today, perhaps, or maybe on to Christmas, of the retirement of Speaker Pelosi. The gentleman, the congressman from Coney Island, Congressman Jeffries, is touted by some, is taking over as the new speaker, the new minority leader for the Democrats. Explain for our international audience the symbolism of a Pelosi retirement and a generational shift for Democrats.
Well, this would be huge news, and we have to use the word be, Tom, because we don't know yet what Speaker Pelosi is going to be announcing this afternoon in Washington, D.C. We just know from her office that she is set to make an announcement, and it is widely anticipated that she is going to say she will not run for the leadership anymore. And that would pass on to a new generation. As you mentioned, this is something that she has discussed with Democrats, and there was even this, handshake deal that would happen. But you never know, of course, because Speaker Pelosi has been a tactician when it comes to the legislative process, when it comes to making sure she's getting the vote out, and the Democrats did very well. All things considered, everyone's saying it was going to be a red wave, and also the dollars that she brings in for the party. She was also the first female Speaker of the House. She has decades of legislative work under her belt. So it would be a very huge shift for the Democrats in the House, but we should wait to hear what she has to say first. Quickly, you should note, though, she did say recently that what happened to her husband in the end of October when he was attacked in his own home, she said that would play into her decision. So maybe she does want to take a moment back and spend some more time with her family at this moment.
Anne-Marie, we're about 8 minutes away from a statement over the United Kingdom, expected to be austerity, expected to be cuts across the board with the autumnal statement from Rishi Sunak. In the United States, as we do have the Republicans claiming the majority, albeit a slim majority in the House, how much are we looking at something not quite similar in the U.S., but perhaps a little bit more of a shift to austerity and a lack of spending?
Well, you can see the Republicans want to put the absolute brakes on any of those agenda items President Biden wanted to get through. You think of closing corporate loophole taxes. You think of raising corporate taxes or raising taxes on the very wealthy in America. That is something the Republicans are not going to vote on board for. But more immediately, and what markets are going to be the most focused on is, of course, the debt ceiling drama. We deal with this every so often, but the Republicans have said in the campaigning towards the midterm elections that they would potentially use the debt ceiling as hostage to enact spending cuts from the Democrats. So in the immediate future, this is something the markets need to focus on. What kind of deal can the Republicans and Democrats do to make sure we're not at that so-called fiscal cliff?
How much are is President Biden coming back from the G20 in an even stronger position versus a somewhat muddied one, especially when it comes to China, and what he'd like to see Congress do in terms of setting certain parameters for businesses in the U.S.?
Well, it's going to be interesting, as you mentioned, China, because also we do have Xi Jinping continuing on this tour as he's left, even though he's hasn't really traveled outside of China, of course, since the COVID-19 pandemic. And he had some interesting choice words about making sure that there's not this power balance dynamic fight within the Asia Pacific, as he's in Bangkok with the Vice President. Kamala Harris will also be there for the APEC. And when I think of China right now in the United States, what you see is that there's bipartisan support. But there's one issue that we have seen Democrats have taken issue with the White House, and that's the Taiwan Policy Act. This is something that has potentially a lot of momentum. Potentially the next Speaker of the House, Kevin McCarthy, when Speaker Pelosi went to Taiwan, he said he'd like himself to lead a delegation, and that would obviously irk Beijing. And that would be an interesting timing because they're coming off the heels of this summit and meeting they had in Bali, which everyone said was a path to potential warmer relationships, at least more of a dialogue. Right. Potentially that would cause a little bit more fiery rhetoric.
Anne-Marie Horton, thank you so much. In Bali, wrapping up the G20 meetings today. My email, Lisa, just lit up like a candle. Where in God's name is Pharaoh? Futures negative 25. Dow futures negative 193. John recovering from an autumnal. We're going to the autumnal speech with the Chancellor. John Farrell yesterday in autumnal Christmas tree cutting, and we do have to thank you to his family for sending along this image. For those of you on radio, it's too emotional. Pharaoh decked out in sort of a, U.S. Forest Service green, choosing out the right bush to put in the living room.
Okay, first of all, just how many levels can you troll, John, as you say that? You quote the Dow into a picture where you mock him for getting a Christmas tree so early.
I did not mock him. It is just...
Is that right?
Clearly on the internet yesterday, thank you for your support here. 99.28% of people said, you got to be kidding me.
My youngest son actually said to me last night, he's like, oh, look, the Christmas decorations are starting to go up around the city. Isn't that nice? And I said, you should have tuned in yesterday. In all seriousness, though, and I actually think that we haven't talked about this enough, we're getting a whole host of these retail earnings, and they're talking about people really are buying.
The tension is tangible.
Yeah, and it really suggests the fast-moving kind of lag effects that are taking effect perhaps a little bit more significantly.
I'm fascinated by it. I'm really fascinated how it rolls over to online and to Amazon as well.
Yeah, the online hasn't been doing so well. Yeah. People want the experience of going.
We are watching historic curve inversion, 64 basis points of inversion. In 5 minutes, Jeremy Hunt of the United Kingdom.
Teslas and the like make for good headlines. The reality is that even if every car on the roads today went electric, it wouldn't be enough to curb global emissions to avoid catastrophic climate change. Greenhouse gas emissions from transportation account for about 29% of total U.S. greenhouse gas emissions. So what about the other 71%?
Buildings across America burn fossil fuels to operate. What we want to do is make that all electric. Instead of burning oil and gas to give us the energy and electricity we need, we want to do 100% clean energy, all electric. We want to turn buildings into Teslas. Just like a Tesla or an electric vehicle is all electric with no fossil fuels, we want to do that with our buildings. And if we can do it in one building, we can do it in all buildings. And if we do it in all buildings, we'll reduce 30% of U.S. greenhouse gas emissions.
Bloomberg has enhanced search on the terminal to deliver what you need when you need it. Now, you can simply type phrases in everyday English in the command line. Compare financials. Find people. Analyze markets. You can enter phrases or ask questions. What do you want to know today? Ask a question or visit SearchGo to find answers now.
Bloomberg Surveillance, Jonathan Farrow, Lisa Bramwitz, and Tom Keene. Mr. Farrow, off today. Let me do data quickly here before we go to the House of Commons. Futures deteriorate, -26. Dow futures, -201. VIX stasis, 24.65, with important housing data coming up today. On the yield basis, up a little bit higher in yield. 10-year yield, 369 out to 3.73. And the curve inversion signaling lots of tension. Ian Lingen and Ira Jersey to join us here to give you Global Wall Street brief along through surveillance this morning. Lisa, I really think we have to frame the originality of a Chancellor of the Exchequer. These are usually bright, well-heeled people. They go through the political process, but very few can say, I had the best Olympics ever. And many people consider the 2012 London Olympics to be maybe the best ever, and this is the guy that ran it. Can you imagine? Think of the headaches.
Well, he's going to need to have the marathon endurance because this is not necessarily a 1 hour kind of gig. I mean, honestly, you're looking right now at a scenario. I really was just saying, I can't believe the pound is as strong as it is, that we're talking 119, 120 versus the dollar when you're talking about the potential for fiscal austerity and 11.1% inflation, right? This is not a positive scenario based on where we were. And yet people have faith that this is the person who can actually rein things back and get a price that is stability, not necessarily winning, not necessarily strength, but at least stability. And that's the goal today.
And of course, what we need to say here is he hasn't had the curtains trimmed yet for his office. We have to remind ourselves going, I mean, Guy Johnson knows better than me. There was Cameron, then May, then Boris and Truss. I believe we're now going to go to the House of Commons for a hugely anticipated speech. Here is the Chancellor of the Exchequer.
Many others are worried about the future. So today we deliver a plan to tackle the cost of living crisis and rebuild our economy. Our priorities are stability, growth, and public services. We also protect the vulnerable, because to be British is to be compassionate, and this is a compassionate Conservative government. We are not alone in facing these problems. But today we respond to an international crisis with British values. We are honest about the challenges and we are fair in our solutions. Yes, we take difficult decisions to tackle inflation and keep mortgage rates down. But our plan also leads to a shallower downturn, lower energy bills, higher growth, and a stronger NHS and education system. 3 priorities then today: stability, growth, and public services. I start with stability. Mr. Speaker, high inflation is the enemy of stability. It means higher mortgage rates, more expensive food and fuel bills, businesses failing and unemployment rising. It erodes savings, causes industrial unrest, and cuts funding for public services. It hurts the poorest the most and eats away at the trust upon which a strong society is built. The Office for Budget Responsibility confirms global factors are the primary cause of current inflation. Most countries are still dealing with the fallout from a once-in-a-century pandemic. The furlough scheme, the vaccine rollout, and the response of the NHS did our country proud, but they all have to be paid for. The lasting impact on supply chains has made goods more expensive and fueled inflation, and this has been worsened by a made-in-Russia energy crisis. Putin's war in Ukraine has caused wholesale gas and electricity prices to rise to 8 times their historic average. Inflation is high here, but higher in Germany, the Netherlands, and Italy. Interest rates have risen here, but faster in the US, Canada, and New Zealand. Growth forecasts have fallen here, but fallen further in Germany. The International Monetary Fund expects 1/3 of the world's economy to be in recession this year or next. So the Bank of England, which has done an outstanding job since its independence, now has my wholehearted support in its mission to defeat inflation. And I today confirm we will not change its remit. But we need fiscal and monetary policy to work together. And that means the government and the bank working in lockstep. It means, in particular, giving the world confidence in our ability to pay our debts. British families make sacrifices every day to live within their means, and so too must their government, because the United Kingdom will always pay its way. I understand the motivation of my predecessor's mini-budget, and he was correct. He was correct to identify growth as a priority. But unfunded tax cuts are as risky as unfunded spending, which is why we reversed the planned measures. As a result, government borrowing has fallen, the pound has strengthened, and the OBR says today that the lower interest rates generated by the government's actions are already benefiting our economy and public finances. But, Mr. Speaker, credibility cannot be taken for granted. And yesterday's inflation figures show we must continue a relentless fight to bring it down, including a rock-solid commitment to rebuild our public finances. Richard Hughes and his team at the OBR today lay out starkly the impact of global headwinds on the UK economy, and I'm enormously grateful to him and his team for their thorough work. The OBR forecast the UK's inflation rate to be 9.1% this year and 7.4% next year. They confirm that our actions today help inflation to fall sharply from the middle of next year. They also judge that the UK, like other countries, is now in recession. Overall this year, the economy is still forecast to grow by 4.2%. GDP then falls in 2023 by 1.4%, before rising by 1.3%, 2.6% and 2.7% in the following 3 years. The OBR says higher energy prices explain the majority of the downward revision in cumulative growth since March. They also expect a rise in unemployment from 3.6% today to 4.9% in 2024, before falling to 4.1%. Today's decisions mean that over the next 5 years,
Jeremy Hunt, the Chancellor of the Exchequer, with a forecast widely anticipated and very much different from the Bank of England. Of course, the governor of the Bank of England making headlines a number of days ago with a 2-year recession, and I did not hear that there in the optimism of the Chancellor of the Exchequer. We welcome all of you on radio and television worldwide across America on a Thursday morning. Claims here in 2 hours. But the claim that I hear there, Lisa, before we go to Guy Johnson, is this was a statement statement of international ramifications towards a situation the United Kingdom is. Could he just have said it's America's fault?
Well, I mean, that's what everybody's been saying, and America's saying it's not just us, it's everybody, and we're actually managing it better than everybody else.
Right.
11.1% is idiosyncratic to also the United Kingdom and to Europe based on the energy crisis, but it is being felt around the world, and the austerity and the emphasis on bringing down inflation, really important.
Two statistics that I really want to frame this for the American audience that are so different. And again, the headline here is the 2023 guesstimate of their economy. 1.8% becomes a positive 1.4%. A gallon of petrol, as Mr. Farrow had said, or Guy Johnson would say, a gallon of petrol is different within the United Kingdom. It is a stunning $7.30-some per gallon versus $3.70 that we see in the United States. And the other we can't forget, and Guy Johnson knows this, is the size of their economy. It is absolutely stunning how much smaller it is than the United Kingdom. Guy Johnson joins us now in London. Guy, it's a more optimistic construction than we heard from the Bank of England and Governor Bailey. Who's correct on the view forward on economic growth?
Tom, when the governor of the Bank of England talked about that two-year recession, he was saying if current market pricing on where rates go is realized, we will have that length of a recession. However, we don't anticipate that rates will get that high. Therefore, by extension, we don't think the downturn will be as severe as maybe that extreme forecast would suggest. So I don't think they're quite as unaligned as maybe they look at first blush in terms of what the headlines look like. Jeremy Hunt's the OBR, and we're going to get a briefing from the OBR around 2 p.m. today, are certainly suggesting that the UK is already in recession and that it will remain in recession for really quite some time, Tom. The issue now is how we manage inflation through that process, how high rates are ultimately going to go, and how severe the fiscal contraction is going to be. Tom, what we are witnessing here is a massive U-turn. We are going from 45 billion of tax cuts to circa 20 billion of tax rises, plus a significant fiscal event in terms of the contraction that we're going to see in government spending. So a massive U-turn being experienced here in the UK.
Guy, this is so important, and I think it really becomes an international story, as we heard from the Chancellor of the Exchequer. Most people in England are not going to buy the idea this is international in any way. Why is he doing that? Why is he selling an international event affecting the United Kingdom?
This is the politics, Tom. What he is effectively trying to do is shift the blame. This is not our fault. This is something that all countries are experiencing at the moment. There is some element of truth in that. Clearly, there are idiosyncratic factors that are affecting the UK. Brexit is the one that instantly springs to mind, and clearly that is having an effect on the economy. But there are international factors as well. You were just talking about the cost of energy. It is significantly higher here, not just at the petrol pump, but in terms of the gas prices, the energy prices, electricity prices that we're all having to pay. So there's some element of truth there, but there are idiosyncratic Brexit, British-related issues that are also affecting this economy.
I'm looking right now, and I was expecting, given the fact that they expect the UK GDP forecast, they expect the GDP to shrink just 1.4% next year from 1.8% of a gain before. It seems like you would end up having an even bigger reaction in the pound than we were having. You're seeing it 118, not that far off where it was. How do you explain that?
So let's think about where the pound has come from, Lisa. And I know a lot of people are scratching their heads over this at the moment, but think about where we were and think about where we're coming from. I come back to this issue of this U-turn. And markets, as we all know, the pendulum often swings too far, and maybe that's what we're experiencing right now. But we've gone from a massive 45 billion of unfunded tax cuts to tax rises and fiscal consolidation. So you're getting a massive swing here. You're going from a government, a chancellor that was playing fast and loose, some would argue, with the British economy, given how feeble our markets are at the moment, to a chancellor that feels more technocratic, that appears to have a grip on the situation, and that is what the markets are ultimately looking for here. So the pound maybe swung too far when it came to what we saw under Kwasi Kwarteng. Maybe it's swinging too far back the other way because Jeremy Hunt isn't Kwasi Kwarteng and he is being the exact opposite, the antithesis of that. We'll see ultimately where it stabilizes. But yeah, no, it's been a big bounce back, Lisa.
Well, a vignette into the austerity of the United Kingdom and the path forward. Guy Johnson, thank you so much. And of course, Mr. Johnson with much more follow through on this later in the United States morning as well. Lisa, it's absolutely stunning to see the level of inflation there versus what we have here.
Yeah, although
stunning.
There is an acknowledgement of what it takes, and globally, there is a feel that the priority right now is to bring it down regardless of what it takes.
Futures deteriorate, -30. It's been a soggy 2 days, maybe in search of information. As Lisa mentioned, retail earnings coming up as well, and claims here in less than 2 hours. Stay with us from New York. This is Bloomberg.
Connection lost.
In the past 2 decades, China has built large infrastructure projects in almost every country in Africa.
African governments themselves said, we are tired of aid and charity. We want to do trade. We want to be treated like partners. The Chinese came along and said, great, we don't do aid and charity. We want to do business with you.
Global Gateway will mobilize 300 billion euros till 2027.
Now the US and Europe are answering back with their own infrastructure initiatives to counter China. But African experts are skeptical.
China has been that guy around the corner with, a bouquet of flowers to Africa, of the US, Europe and the UK, of time and time again